By the end of this video, you're going to know everything that you need to know on how to become a day trader as a complete beginner. This full course will be packed with more value than everybody puts inside of their courses and sells to people for hundreds and sometimes even thousands of dollars. I'm going to take you all the way from the beginning, from what is day trading to how to read charts, what candlesticks are, the platforms you're supposed to use, the strategies you should use, how to manage your trades, how to journal your trades. I'm going to teach you everything you need to know on how to become a profitable day trader. First of all, who am I? My name is Joovier and I've been trading for 7 years now. Day trading has allowed me to live my dream life. I bought my first home for over $1 million. I bought my wife her dream car. I have financial freedom. I can buy literally whatever the heck I want to, whenever I want to. I can live wherever I want to because I now have time freedom and location freedom because of day trading. I'm able to not just take care of myself and give myself the life I never thought possible, but I'm also able to do that for my friends and family as well. Over the past 7 years, I've been able to consistently make multiple six figures every single month day trading. And that's why I truly believe that everyone should learn how to day trade. And that's the main reason why I'm making this entire course completely for free, because I feel like you and every other person watching this video deserves to learn this skill that can not just set you free, but set your entire family free to live your dream life. In this video, I'm going to deep dive into every single thing that I know about trading and everything that you're going to need to know about trading to be able to start consistently making money day trading. And at the same time, I'm going to keep it as informational and as educational as possible, because I remember when I was first starting learning how to day trade, everybody was making it super complicated. And over the past 7 years and being able to help thousands of people learn how to day trade, I've been able to package it in a way that's extremely simple. That way, even a 6-year-old could actually learn how to trade, which I actually have taught a 6-year-old how to start trading. So I'm going to do that in this video as well to hopefully keep you entertained, informed, and enough education so that you can feel confident getting started on your day trading journey. Grab yourself a notebook, grab yourself some water, and get ready to change your life. Let's get into this. So what is day trading? In simple terms, it's realistically just hopping in and out of trades pretty quickly. You've probably seen your grandparents or parents even talking about buying stocks and holding stocks for years or until they retire and making money from it. That's not what we're talking about. We're more so talking about hopping in trades and predicting where price on a specific stock, crypto, futures, currency pair, any of those, we're just predicting where price is going to go, and we're making money when we're predicting it in the right direction. The cool thing about day trading is that we can actually make money where the price is going down or going up. So unlike holding stocks, if price goes down while you're holding the stock, you're going to be losing money. Versus with day trading, if we predict price is going to go down, we can make money when price goes down, and vice versa, we can make money when price is going up. Now, there are many different components that go into predicting where price is going to go, and we're going to get to that later on inside this video. But basically, we can just look at specific patterns, and usually inside the market, patterns will repeat itself. And like I said, we'll get into that a little bit later on inside this video, so stay tuned. Let me answer some frequently asked questions that a lot of new people end up having before we even get into the trading part itself. How much money is needed to start day trading? Honestly, now you really don't need much. You can start off with $200, $300, $400, even $500. I always suggest for people to have at least $500 put aside to start with this, but you can start with a lot less amount if you wanted to. And I'll get into a cool trick for you guys later on inside this video where you can take $200 and get access to over $100,000 to trade with. How much time do you need to be able to trade every single day? A lot of people think I sit on the charts and look at it for 5, 6, 7, 8, 9, 10 hours a day, when in reality, I'm probably looking at the charts maybe 30 minutes every single day. And I try and help everybody get to that same point. We don't want to be sitting in front of the charts every single day. We want to be able to trade in the morning, make our couple hundred, couple $1,000s, go live our life, enjoy our life with our family, go do the things that we love to do. So that's why realistically, you don't need much once you learn the skill. Now, obviously trying to learn the skill is going to take a lot more time than just 30 minutes a day. But once you get it and get all the education, realistically, you don't need to trade long at all. How long until you can start making money? That's a great question. And it really depends on how much work you put in and how disciplined you are. I've had people that have started making money consistently within a month of learning this. And I've also had people where it's taken 8, 9, 10, even 12 months to start consistently making money in this. It really comes down to how much work you put in and how disciplined you are when it comes to this trading game. Now, what kind of equipment will you need? A lot of people think you need a super fancy computer. They think you need a $10,000 computer, gaming computer, whatever. They think some crazy things, when in reality, you can use a regular old laptop. As long as it has Wi-Fi and it turns on, you can trade with it. You can even use your phone. You can use an iPad. Now, I don't suggest you using your phone, especially in the beginning, because it's hard to learn and understand the charts on such a small screen, but you technically could. You don't need any crazy equipment at all. I guarantee you, if you have a laptop that has Wi-Fi and it turns on, you can start trading. Can day trading be your main source of income? 100%. I make multiple six figures every single month from day trading, and I technically could have it as my main source of income. The only thing that stops me from doing that is because of the fact that I only trade for 30 minutes a day. So I kind of want other things to do throughout the day. So I end up getting into other investments. I end up starting other businesses. I start doing other things to make me even more money, because day trading makes me a good amount of money in such a short amount of time. I have so much more day to go. So let's get into the fun stuff here. There are multiple different types of industries that you can day trade in. We have the futures market. We have the forex market. We have the crypto market. We have the stock market. We have the options market. There are so many different things that you can trade, but those are the top 5 ones that most people end up trading. Now, keep in mind, I mainly trade futures and forex. I also trade a little bit of crypto, but for this video, I'm going to really break down futures and forex trading. But keep in mind, everything I go over in this video is universal to every single thing, every single industry that I just mentioned, whether it's futures, forex, stocks, options, crypto. What I talk about in this video can be applied to every single one of them. Once you learn this skill, you can end up making money in every single environment of trading. Like, I started off in the forex market and the crypto market, and since I already knew how to trade in the forex and the crypto market, I was easily able to transfer over into trading futures and also trading options. Now, keep in mind, stocks is a little bit different. You need a lot more money to day trade it, because remember, day trading, we're getting in and out basically every single day. We're not holding this for years and months and things like that. But forex, futures, and crypto and options trading, you don't need as much money, and you can get in and out of these pretty fast during the day. It's also important that you figure out what type of trader you are. There are 3 different types of traders. There are swing traders, there are scalpers, and there are intraday traders. And basically the difference between all those is really just how long you're in each trade. Us as day traders, most of the time, like I said, we're not holding these trades for weeks and months and years and things like that. We're kind of in and out in a shorter amount of time. So scalpers are in and out of trades the most. They are probably in trades for a couple seconds to like 5-10 minutes max. That's what a scalper is. Someone that just likes to be in and out of trades very fast. They end up taking actually more trades throughout the day versus someone that's an intraday trader. An intraday trader will hold trades anywhere between 15 minutes to 2 hours. They're usually holding trades a little bit longer, but they're not holding them past a whole day. They're most of the time going to be in and out of them within 10, 15, 30 minutes, all the way up to, like I said, 2-3 hours. That's what an intraday trader is. Now, a swing trader is someone who would hold trades for hours, sometimes even days. But most of the time, they're holding these trades for a couple of hours minimum, or a couple of days. So you need to figure out with your personality if you would be a better fit as a scalper, an intraday trader, or a swing trader. Keep in mind, all the strategies and all the information I go over inside of this video can apply to all of them. You would just have to change the time frames and the way that you're trading it, but you can use the same price action and the same knowledge, but understand what type of trader you are based off of your personality and your trading goals. Okay, so getting into trading itself, you're gonna hear me use the word pairs, you're gonna hear me use the word instrument, and this basically just means the asset that we're trading, the thing that we are actually trading itself. I'm gonna give you guys the top 5 most popular ones. I'm also gonna give you guys my favorite ones in both the Forex side and the future side, so you guys can kind of understand exactly what we're looking at, and so you guys have some examples of things you might wanna go and start researching and start looking at, maybe practicing on. Okay, so here on the future side, if you guys can see, we have the top 5 really most popularly traded ones. I'm not gonna lie, natural gas is not a top 5 popular one, but it's one of my favorite ones to trade, so I put this in there. But basically, we're able to trade the futures S&P 500, the ticker symbol is ES. And basically all ticker symbol means it's just the shorter version of the asset or the instrument or the pair that we are trading. When we're going and trying to find these pairs and trying to find these instruments on the different platforms that we'll go over later on inside this video, you can just, instead of typing out E-mini S&P 500, you could just type in these ticker symbols and it's a lot faster and a lot easier. But the top ones are ES, which is the S&P 500. We have NQ, which is the NASDAQ or NAS 100. We also have YM, which is the Dow Jones. We also have gold, which is the ticker symbol for that is GC. And we also have natural gas futures. The ticker symbol for that is NG. Now keep in mind, these three top ones are the top three traded ones really in the futures market for the most part. The S&P 500 being the most traded one. It's a good starter one to start practicing on, the S&P 500, if you do want to get into futures trading. But a lot of people like trading gold as well, and I absolutely love trading natural gas. My top two favorite ones realistically is going to be NQ and NG. NG is also a great one to start with if you are a beginner because it moves very slow. So if you're a new trader, you're just learning it, you don't want to kind of get psyched out and confused and kind of thrown all over the place because NQ, YM, and ES can all move pretty fast if you're not used to it. Now on the Forex side, so Forex is always going to be currency pairs. So it's going to be Euro USD, which basically just means the Euro dollar versus the US dollar. Same thing with GBP JPY. It's going to be the Great British Pound versus the US dollar. And it's the price discrepancy between each and every pair that you see here. So we have Euro USD, which is going to be the most traded one. We have GBP USD as well. We have GBP JPY, we have USD JPY, and we have USD CAD. Now keep in mind, I put three down here as well. These three are basically the same as these three up here. NAS 100 is the same as NQ. It's just the Forex version of NQ. We also have SPX 100 or S&P 500, which is the same as ES on the future side. Then we also have US 30, which is the same as YM on futures. So just keep that in mind. Now my top three favorite ones when it comes to trading Forex pairs and Forex currencies is going to be GBP USD, GBP JPY, and USD CAD. A great one to start off with if you are a beginner though, just to get used to it, is Euro USD because it moves a little bit smoother and a little bit slower than all these other ones. So if you're a new trader, it's really cool to start. It would be pretty smart to start on Euro USD just due to the fact that this is a nice pair for beginners. It's smooth and it's slow. Now, I went over the top 5 in the Forex and the futures market, but keep in mind there are so many things that you can trade when it comes to futures and Forex. Honestly, you can trade futures corn. Like you could trade the price of corn, you could trade the price of livestock, you could trade, it's a crazy amount of things that you can trade, but you shouldn't get too confused with everything that you can trade. It's cool if you start off with the ones that I recommended, because like I said, they're gonna be a little bit more beginner friendly versus you trying to guess the price of freaking wheat and corn and things like that on your charts. So keep in mind, there's so many things that you can trade, but try and not get caught with that gold flashy syndrome where you keep chasing every single thing that you see. But just try and focus on one thing max so that you can just get used to trading and used to reading charts. So now that you guys know the most popular pairs, whether it comes to Forex or futures, you have to be aware of the fact that certain pairs or instruments will move more at certain times of the day. And that's because of these things called trading sessions. So the market is really moved by these huge bankers and these huge funds that are actually buying a lot of things and selling a lot of things. That's why you see prices of stocks or cryptos going up or down. It's not us. It's not you with $200 or somebody with even $1 million buying or selling something. That's not making the price move. It's people that are buying hundreds of millions of dollars worth of these things that's making price go up or down. And the reason why that's important is because at certain times of the day, these people are working. These people are actually looking for setups. And it's important to understand their trading sessions and trading sessions overall so that you can know when you should be trading certain things and when you should not be trading certain things. Because like I said, at certain times of the day, let's say, for example, NQ will move a lot more than at the middle of the night. It won't move a lot. So maybe you shouldn't trade it when it's not moving a lot. Maybe you should only trade it when it's moving a lot. And to understand that, you have to understand trading sessions. So let me show you guys what are the main trading sessions so you can be aware of when you should be trading specific things. So as you can see on our screen here, London session starts at 2 o'clock in the morning Eastern Standard Time and ends at 11 o'clock in the morning Eastern Standard Time. That just means that really anything that has to do with London or GBP, if we're talking about forex, so if we're looking at any pair that's like GBP USD or GBP JPY, any pair that has GBP in it is going to move the most during that time window of 2 a.m. to 11 a.m. Eastern Standard Time. Now the next session is New York session, and New York session starts at 8 a.m. Eastern Standard Time and ends at 5 p.m. Eastern Standard Time. So there's a window from when London session and New York session are actually overlapping, and that's from 8 a.m. to around 11 a.m. That's when London session and New York session are in effect. And that's when there's the most volume inside the markets. That's when most people trade. That's when I end up taking trades, because there's so much volume in the markets. There's so much price movement in the markets that it's easy to make a large amount of money in a small amount of time just because there's so much volume. But like I said, New York session is from 8 a.m. Eastern Standard Time all the way up till 5 p.m. Eastern Standard Time. Now, Tokyo session is the last session really of the night, and it starts at 7 p.m. Eastern Standard Time and ends at 4 a.m. Eastern Standard Time. Now, keep in mind, New York session is really when you're going to have the most movement in basically every single currency, whether you're trading NQ, ES, NG, any forex pairs, any futures pairs. It's all going to happen within New York session for the most part, and most of the time during that 3-hour window when New York session and London session overlap. Now onto Tokyo session. Realistically, there's not a lot of volume in Tokyo session. It's only on specific forex pairs that have JPY in it. So if you're trading USD JPY or GBP JPY or anything that has JPY in it, it's going to be a little bit of volume during that time. But to be honest, it's not a lot of volume during Tokyo session. And that's just due to the fact that all the other sessions are kind of off at that point. London session and New York session are not happening. And the Tokyo market realistically is not that large. So there's not a lot of price action during that time. Now, it is possible to make money. And I do know people that are making a killer amount of money in Tokyo session. But the market just moves a little bit slower during Tokyo session. Okay, boom. So now that y'all understand pairs and sessions, now we have to get into the super fun stuff. This is the type of information that's going to help you make hundreds, thousands, and multiple thousands of dollars with day trading. I told you guys day trading is all about using analysis and analyzing the market to see if price is going to go up or price is going to go down, so we can make the best guess possible to end up making money inside of the markets. So there are two main type of analysis that day traders use. We use fundamental analysis. I just missed my finger. You use fundamental analysis and we use technical analysis. Fundamental analysis, all that is, it might sound weird or like you never heard of it before. All it really is news events or any like news thing that happens that has to do with that pair or that currency or that stock or that crypto that you're looking at or trying to trade. What that could be is, let's say, a Tesla car just blew up. Odds are Tesla stock is going to end up going down. Or if interest rates come out, that's going to affect the markets either good or bad, depending on what number came out. Or like when we had the COVID-19, like that heavily affected the markets. It's just any news event that has to do with like real life things that could either indirectly or directly affect the thing that you're trading. And what I mean by indirectly is like if, God forbid, a World War III happened, that would indirectly affect the market because it's not specifically anything towards the market, but it's something against people, and people get scared and end up moving money around, so it affects the market. Now, obviously, there's more direct things where, like, if Delta loses 20 planes and 100 people die, God forbid, on plane crashes, the Tesla stock is going to drop. Or if NVIDIA comes out and says they made $100 million more than they thought they were going to make, their stock price is going to go up. That's all fundamental analysis is. As a day trader, we are conscious of it, but the main thing that we use to make money and predict where price is going to go is technical analysis. And technical analysis is simply looking at charts, looking at patterns in the charts, looking at the candlesticks, looking at all the different things on the charts, and using that to predict if price is going to go up or down based on previous patterns. Now, it's extremely important that you understand technical analysis, because with technical analysis, that's how I'm able to predict if price will go up or down, and how I'm able to make thousands of dollars every single day by simply memorizing these patterns understanding these patterns, having an eye for it, and acting when I see these things happen. Now, in this next section, I'm gonna go over everything you need to know about technical analysis. I'm gonna show you guys what website to use, how to understand candlesticks, how to predict price. I'm gonna give you guys the full in-depth thing. I told you guys I'm gonna give you guys all the information that you guys need to be able to start day trading. So let's hop into these charts. All right, so here we are on TradingView. TradingView is going to be your best friend as you're getting into trading. This is where every trader comes on to be able to look at any stock, any indice, any crypto, anything, and mark up their charts to be able to predict where price is going. Now, keep in mind, TradingView is completely free. You can have paid versions of it, but as a beginner, you can just create a free account on it, and you're basically able to do everything you need to do in the beginning of your trading journey. So just come over here to tradingview.com. Now, once you do that, you can come over here to hover over products and just press super charts, and it'll take you into a chart that basically looks like this. Now, keep in mind, you've probably seen this if you've watched any videos on trading or even have just been on social media. It's a bunch of people that kind of post these type of things. This is called a chart. This is what we as traders look at to be able to predict what price is going to do, whether it's right now, in the next 10 minutes, in the next 5 minutes, in the next hour, the next day, week, year, whatever it is. This website is extremely vital for that. So you need to get extremely comfortable with it. And I'm going to help you do that. I'm going to break down exactly what all these things are and what you need to know about TradingView. So let's get started. So first of all, starting off up here, this panel right here just has a bunch of different tools. Think of it as basically this whole screen is just a drawing board, and all these things right here can help you draw on it. You have a line that you can just draw. You can change the colors of it if you want. You can hit drop downs over here to have different things as well. Same thing over here, a bunch of different tools for you guys to use. Don't worry about all these things. You don't have to worry about the majority of these things. All you're gonna have to worry about is certain things that I'll show you. I'll point it out for you guys. But we have these over here. You can hit drawdowns on all these. You can draw on the chart if you want to. You can realistically do whatever the heck you want to do on the chart. But the main tools you're going to end up needing is this crosshair first one. Then we can have this drop down, this line, this trend line. You're going to need that. So what you can do when you create your account on TradingView is hit the star next to the trend line, and it'll basically add it to your favorites, and it'll pop up here. So I have mine for trend line, I have mine for horizontal line, and I have mine for horizontal ray. They're all just different type of lines for the most part. And then on this drop down right here, there's nothing really that I have. This one here, I don't have anything. Right here, I have long position and short position. You can put a star next to those. And basically all these do is you'll press, basically this, for example, would be where you would enter a trade at. This top part would be where you think price is going to go to, and this bottom part would be where you would want to exit a trade if it's not going in your direction, just to help minimize your losses. And we'll get into that a little bit later on, but I just want you guys to be aware of these things. Now, I have a brush favorited on here, as well as a rectangle and a path. You can do that as well. As you guys see, it's just all the favorites that I had up here, which is mostly just the things that I end up using on a day-to-day basis, just so I don't have to go through here and click through it just to find it. But that's basically all what these tools are. Now over here to the top left corner, this is what pair you're looking at or what instrument you're looking at. You can click on it and you can type anything you want. If I want to type Bitcoin, I can type Bitcoin. If I want to type Ethereum, I can type Ethereum. If I want to type US 30 like we talked about, I can type in US 30, GBP, JPY. You'll see a bunch of them, and what you'll see is the ticker symbol over here to the left. You'll see their full names right here, and you'll see what platforms that they're on. Now, keep in mind, don't be too concerned about these and the platforms that they're on as of right now. These just, because sometimes the price will differentiate by a little bit. So GBP, JPY on the Owanda platform might be $10 different than the GBP, JPY on the FXCM platform. But just starting off, you don't have to worry too much about that. For the most part, you can use either one of them. But if you look over here to the right of the name a little bit more, you see numbers right now. It might look a little bit different for you. You might have different numbers. This is just the ones that I use for the most part. And basically all these are what we call time frames. So this 1M means 1 minute time frame. 5M means 5 minute time frame. 15M means 15-minute time frame, hourly, 4-hour, daily, that kind of stuff. You can hit this drop down and basically click anything that you want at that point. And basically all that means when we click on those time frames, it just means each and every one of these candlesticks represents what's happened in 5 minutes, because I'm on the 5-minute time frame. If I go to the 1-minute time frame, each and every one of these candlesticks represent what happened in 1 minute, and so on, so on, so on. Like I said, we can go up to the 15-minute, hourly, daily time frame. And I'm going to go over exactly what candlesticks are in a little bit, but I just want to finish going through TradingView so you guys understand how to use it. So right here, as you can see, there's these things called indicators. And basically, indicators can be little tools that can help you in your trading. It can show you really what price has done the past couple of days or so with certain indicators. If you click on indicators, you can actually see a bunch of different ones on here. If you want to type in anything that you might see on social media, you can type it in up here. There are a bunch of different indicators. To be honest with you guys, I'm not really a huge fan of indicators. I just use the indicator that I personally made, as well as one other indicator called kill zones. And all kill zone does is shows me on the chart when New York session starts, Tokyo session starts, and London session starts. So I don't have to go back and see, okay, this is at 12 o'clock. This is London session. It just shows me it on the chart. So it just makes it a little bit easier for me. That's all kill zone does. But here you can use your indicators, and when you press your indicators, it'll just go onto the chart and things like that. But right now we're not going over indicators. We'll go over that a little bit later. Now you can add indicator templates if you want. This right here is an alert button, which is extremely powerful. I told you guys I really only trade for I'm really only on the charts for like 30, maybe 35 minutes a day. A lot of the times a lot less than that. And the reason being is because I utilize alerts. Alerts are extremely powerful because I don't have to sit here and watch the chart 24/7. I can press here and set an alert. And when price gets to a certain number, or if price does a certain thing, or if a stock does a certain thing, I'll get a notification right to my phone. I'll get it on my phone. I'll open up the chart. I'll see if I want to buy or sell. I'll buy and sell, and then I'll set an alert at certain areas, if I want to close my trade there or close my trade there. It doesn't matter. I'll have an alert. That way I don't have to look on the charts the entire time. I'll just get notifications sent right to my phone, so I can act when I get those notifications without having to wait here this entire time. But that's what the alert does. Now there's this replay feature right here. This is extremely important when you want to start practicing trading. This is what we use to backtest. And I'm going to get into how to backtest so you get comfortable with the charts later on inside this video. So make sure you stay tuned, because backtesting is a huge part of all this. And this replay feature is exactly how we're going to do it. Now to the right over here, we have our watch list for the most part. So if you know that you want to trade gold, right, you can type in GC, as we talked about before, and that's gold futures. And we can press that and it'll go right onto our watch list. That way we don't have to type in every single pair that we want to trade every single time we want to look at the chart. We can just come over here to our watch list and click through it just like that. It makes going from pair to pair to pair way easier and way faster. Now, that's realistically all you have to know on the chart for the most part as far as TradingView and how to use TradingView. You can right click on your chart and go to settings. You can change the colors of the candlesticks if you want. Instead of it being green, which means it's going up, and red, which means going down, you can change it to purple and blue. You can change it to white and black. You can do whatever you want to do at that point and kind of just play around with the settings in here. Keep in mind, I don't really play around too much with the settings. I'll change the color of my candlesticks. That's really about it. I don't really change anything else in here for the most part, but feel free to play around with it if you guys have a color preference if you want. But I think in the beginning, it just makes sense to just stick with the normal colors of green and red. But like I said, for the most part, that's kind of all you need to know about TradingView. Now let's get into understanding exactly what we're looking at. What are these candlesticks? What do they mean? And how do we use these candlesticks to be able to know if we should buy something or sell something? So let's break down candlesticks. Candlesticks are probably the most important thing that you're going to need to know when it comes to technical analysis, really when it comes to trading overall. I made a nice little drawing here. Obviously, these are real candlesticks. This is my drawing. As you see, they're all different shapes and sizes, all different colors, but I'm going to break down exactly what these mean. I know when I was first starting off trading and I was trying to learn it, everybody made it super complicated. I'm gonna make it extremely simple for you guys. There's two things when it comes to candlesticks. We have the body and we have the wick. The body is this thick part, the fat part, whatever you want to term it as. And then we have these lines right here, these skinny lines. These are called the wicks. Body and the wicks. All the body means is that's where price opened at, and then that's where price closed at. And what I mean by that is, remember how we talked about what specific time frame we're on. If we're on the 1 minute time frame, that means all these candlesticks represent what's happened in the time of 1 minute. If we're on the 5 minute time frame, these candlesticks would represent what happened in a 5 minute span. So when I say we're on the 1 minute time frame and the body shows us the open and the close of that candlestick, that basically means at the start of 1 minute. So let's imagine right now, where's my text tool? Let's imagine it's 1:01 p.m., right? This is 1:01 p.m. This next candlestick would then be, here we go. This next candlestick would then be 1:02 p.m. Then the next one would be 1:03 and 1:04, right? But at the end of this 1:01 candlestick, price opened right here on a green candlestick or a bullish. Bullish means it's going up, bearish means it's going down. So on a green candlestick or bullish candlestick, the bottom of the body is where price opened up at. That means at 1:02 exactly, this is where price was, because the last price ended right here. The last candlestick ended right here. Now the top of the body represents where price ended at, exactly what number price was at the end of 1:02 p.m. Now the wicks just represent what's happened during that entire span. So just because this 1:02 candlestick opened or started right here and it closed right up here, that doesn't mean price didn't do anything else throughout that time, but throughout that time of 1:02, right? Price, the wicks represent where price has went throughout the entire time. So that means at 1:02 and maybe 10 seconds, it came down here. At 1:02 and 50 seconds, it came up here. At 1:02 and freaking 43 seconds, it was right over here. It just represents the highest of where price was at. The top of the wick represents the highest of where price was at during that candlestick. The bottom of the wick represents the lowest of where price was at on that candlestick. Now, same thing vice versa with bearish candlesticks or red candlesticks, except we're switching it. So we know the bottom of bullish candlesticks is where price started at. At 1:02 p.m., price was right here. And right here basically means if we look over to the right, it was at, on this specific example, it was at 19,870, right? You guys can see it towards the right of my mouse. 19,870. That's where price was at when 1:02 started. And then at the end of 1:02, price was at 19,956. But then remember, this is our 1:03 candlestick. I told you guys it's vice versa. So because it's going down, that means the top of the body of our candlestick here, right here, the top of the body of our bearish candlestick means that's where price started. At 1:03 p.m., this is where price was at. The bottom of a red or a bearish candlestick is where price closed at. That means at the end of this 1:03 candlestick, price was right here, which is at whatever number that is. And the same thing with the wicks. Throughout this entire 1:03 candlestick, price could have went all the way up here, could have been down here, all the way up here, went all the way down here. Throughout this entire candlestick, it's done all this. It's been all the way through here, but it opened here and it closed here. Same thing with this additional red candlestick. This would technically be the 1:04 candlestick where price started right here and it went down more and it ended up at the end of 1:04, it closed right here. This is where price was at the end of 1:04. Same thing with the wicks. That just means price went up or down in that range. So hopefully I was able to make this pretty clear for you guys. I know for me in the beginning, it was like one of the hardest concepts for me to grasp. So I try and make it as simple as possible for people by just letting people know bearish candlesticks, the body means that's where price started at that time. The top of the body is where price ended at that time. Now with bearish candlesticks, it's the opposite. The top is where price started, the bottom is where price ended at. And all the wicks mean on all the candlesticks, that just means what price has done, where price has been. Price could have been anywhere in this range throughout this entire candlestick, But when the clock struck 1:03 p.m., price ended up ending right up here. So that's how you understand candlesticks. And like I said, obviously there are a bunch of different shapes and sizes because price can realistically do anything. If we look on the charts here, same thing right here. We can see all these green candlesticks. This is where price started. This is where price ended. The wicks is where price has been throughout this entire time. Same thing with these red candlesticks. Price started right up here. Price ended right down here. The wicks is where price has been throughout this 1 minute candle, because remember we're on the 1 minute. Now keep in mind, if we go to the 15-minute time frame, we'll see the exact same thing. We'll see, let me turn this indicator off. we'll see the exact same thing, except the candlesticks will look a little bit different. Rather than if we were looking on the 1 minute time frame, because each and every one of these candlesticks, let's say because this is a 15-minute candlestick, let me just show you guys right here. So if I put a box around this 15-minute candlestick, let's just make this white so everybody can see it easily. So this is one 15-minute candlestick, but keep in mind, this is a 15-minute candlestick. So that means if we go to the 5-minute candlestick, there are 3 different boxes that are inside this 5-minute candlestick. Just like this. This is the 3 boxes that's in that 5-minute candlestick. That's in that 15-minute candlestick, just because we went to the 5-minute time frame. Now, if we go to the 1 minute time frame, we'll take one of these candlesticks right here. One of these candlesticks is a 5-minute time frame, or one is a 5-minute candlestick, sorry. If we go to the 1 minute time frame, these are all the candlesticks that happened in a 5-minute span. So you'll see the same price action on a 15-minute or a 1 hour or a 5-minute candlestick, but the lower time frame you go, the more in detail you get to see what happened in it. Because, like I said, we're able to go just more in depth in what's happening during that 15-minute. If we go down to the 5-minute, we can see exactly what happened at 3:55. If we go to the 1 minute, we can see exactly what's happened at 3:58, 3:57, 3:56. You can even go to second candlestick time frames if you want. I don't really do that. It's kind of too fast for me, I'm not gonna lie. But sticking to these candlesticks and understanding what each and every one of these candlesticks means is extremely important. So hopefully I was able to break it down simply enough for you guys to understand exactly what you're looking at. Remember, it's always going to be different shapes and sizes because price does something else, something new every single candlestick. So now that you guys understand candlesticks and what each candlestick means, that is a very, very valuable skill to know. Not a lot of people in the world know that. And if you know just that, what each candlestick means and represents, what the body represents, what the wick represents, you can actually start trading just with that. Now that's what some people like to call price action or just candlestick trading. I don't really do that too much, but it is something that a lot of traders use. And the reason why it's so powerful is because since we know what wicks mean and what bodies mean and all that different type of stuff, we can look at a candlestick and be able to guess the next 2 or 3 candlesticks and see what price is going to do. For example, with this example right here, we have red candlesticks going down. We have a bunch of red candlesticks going down. Then we have a small body right here with a small wick to the top and a long wick to the bottom. That means, and that shows us that price tried to come down here, but just couldn't stay down here. It tried to come down here, but couldn't stay down there. So it ended up closing up here, which means, and this is how I like to word it and kind of how I teach people that are kind of younger. I say price was scared of down here. And when price is scared of down here, that means in reality, price is probably going to end up going up. And that's exactly what happened. We saw this candlestick with a small body here and a small wick at the top, but a huge wick at the bottom. Price tried to be and stay down here, but it just couldn't. So it ended up coming back up here. And as we see, if we zoom out, price just continued to go up. So that's one way you can use it if you find candlesticks that look like this. Another way is understanding if you see small candlesticks in comparison to the other ones. We see we have this huge green candlestick. Keep in mind, anytime you see a huge full body candlestick, something like this that's big and it doesn't have a lot of wicks at all, that's a high probability that the next couple candlesticks are going to continue to go up. Or vice versa. If we see one like this, a red one, next couple candlesticks are going to continue to go down. So we see this and we're like, okay, price is probably going to continue to go up. But then we see these small red candlesticks. And what these small red candlestick means, or any type of, they could be green as well, it just means uncertainty. When there's a small body, but kind of equal wicks at the top and equal wicks at the bottom, that means like the wick size is basically the same. That just means there's uncertainty. So that means that price doesn't know if it's going to continue to go up or continue to go down. Same thing happened here. We had wicks at the top, wicks at the bottom that are basically the same size, and a small body. So price was just uncertain. And then the next candlestick, we had a more certain body where we had a huge body and smaller wicks, and we see price continue to go up. Same thing, this is another great example right here where we see a huge body, small wick at the top, and big wick at the bottom. If we remember what I just said before, price is scared of down here. Price tried to go down, but it couldn't, and it ended up going up. So that means realistically, it's probably going to continue to go up. And as you see, it continued to go up. Now, vice versa on the other side, I showed you guys examples of where price was scared to go up. Now I can show you guys an example of where price was scared to go down. Where we were going up, then we see a lot of small candlesticks. Any single time you see small candlesticks, that just means price is uncertain. There's uncertainty there. So because there is uncertainty there, the next candlestick we had where price tried to come up here, we see that wick where price tried to come up here, but it was scared of up here, so it ended up going down. We were able to have a nice sized body going down with not so big of a wick going down, and that shows us and told us that price was going to end up going down even more, and that's what it ended up doing before going back up. So just being able to know what candlesticks look like and understand what the bodies mean and the candlestick wicks represent, it can help you out a lot just with that information. Now, there's obviously a bunch more things we'll add onto it as we go further along in this entire tutorial. But that's a good starting base to understand and just be able to look at candlesticks and be like, okay, if I see this candlestick, the next one probably will continue to go up, or the next couple ones will probably continue to go up. Or if it's going up for a lot and then we see a bunch of small candlesticks, that just shows us that price is probably going to end up going down for a little bit, that kind of thing. So candlesticks are a huge part of trading, but you also have to understand market conditions. You have to understand what type of market we are in. Price never goes straight up, right? Same thing, price never just goes straight down. Price always does these little ranges where we'll go up, down, up, down, up, down, up, down, that kind of thing, right? Now, this is what we call a trending market for the most part. This is where price is making higher highs and higher lows. If you guys hear that analogy come out, or if I say that analogy at all that means is that price went up and it created a low, then it made a higher high because this high right here is higher than this previous high. So that means this high and this high created a higher high. Now this low is right here, and then right here we create a higher low. Same thing right here, higher high, higher low, higher high, higher low. And then vice versa, if we're going down, it's the same thing, except we have a low, then we have a high, then we have a lower low, then we have a lower high, a lower low, and a lower high again. So that's when you're kind of able to tell if we're in a trending market, when you're seeing higher highs and higher lows, or if we're in a bullish trending market, or if we're in a bearish trending market. Because remember, bullish means we're going up, bear means we're going down. So let's delete all of this off my screen. But there are also times where price is in a consolidation, and all consolidation means, or a range means, is that price is just going up or down, right? It's just going up or down. It's not really making higher highs, higher lows. It's just really going up or down and staying in what we call a consolidation or a range, which just means that price is staying within a range. Now, the reason why that's important is you need to understand certain strategies will work better in trending markets versus consolidation or ranging markets. And we'll get into my favorite strategies and the best strategies for beginners a little bit later on inside this video, but you need to understand market conditions and the trend that market is in right now so you can understand how to trade it, so you can make the best decisions. Because you don't want to be trading a strategy that works great in a trending market when we're in a consolidated market. You don't want to be trading a strategy that works great in a consolidated market when we're in a trending market. So it's extremely important to understand what those are. Now, we also have markets that are called, I like to call them breakout markets. And basically it's the same as ranging markets, except sometimes it'll range and then it'll break out. So we'll be going up. It's really a hybrid between ranging and trending markets. So it'll go up, then it'll range for a little bit. You see we're in a little bit of a range, and then it goes up, and then it'll come down, range for a little bit, and then it'll go up and break out to the upside. Now the same thing can happen to the downside where we can be going down, then it can range for a little bit, then break out to the downside, then range for a little bit, then break out to the downside again. So there are the three different markets. The main ones really are the consolidating market, which is the ranging market, and we have trending markets. Then also we have what I like to call a breakout market, which is really a hybrid between a consolidating market and a trending market. So now that we understand exactly what technical analysis is, we understand candlesticks, we understand candlestick patterns, we understand the type of markets. Now it's time to go over indicators. I kind of explained to you guys that indicators are a little bit of a cheat code or tools that can be used to help you in your analysis of the market. A lot of technical analysis traders will use certain indicators to help with their strategy. So in this segment, I'm going to go over what indicators I personally use and which indicators I would suggest for you guys to probably try out. It might help you out in the beginning of your journey, or if you are just trying to get used to trading and need a little bit more help on determining if price is going to go up or go down. I'm going to show you guys which indicators I personally suggest. You guys can feel free to look up any other indicators, but to be honest with you guys, indicators are not going to make or break you. I personally rarely use indicators, and I'm a very successful trader. I know a lot of successful traders who don't use indicators a lot, and I also know some successful traders that do use indicators, and their whole strategy is based off of specific indicators. But I want you guys to be aware of indicators that you guys can test out for yourself and see if it's something that you want to have for you guys to be able to use in your trading. But like I said, it's not a necessity. You don't need indicators, but it can help you. So let's hop into a couple of indicators that I personally like. So here, if we come over to indicators, we can type in really any indicator that we want. We can type in moving average, which is, you probably heard of a moving average before, which is what a lot of people use. Basically, all a moving average is, it's a line. You see the line popped up on my chart here as soon as I pressed it. It's this blue line right here, but it basically just tells me what price has done over the past couple candlesticks. And what I mean by that is we're on the 5-minute time frame for the most part. If I double click on the moving average, or if I hit this drop down right here next to EMA, or whichever one you had clicked, this is where all your indicators would be under this drop down. But if you click this little setting symbol, you can actually come in here and change the numbers up. So for moving average, keep in mind, I don't really use moving averages too much, but a lot of traders use them, and you guys probably should test them out for yourself. But what this length means, basically it just means the amount of candlesticks that is taking the average of. The moving average just takes the average price of where price has been over the last blank number of candlesticks. Now in this instance, the length is 9, which means the last 9 candlesticks, the average of where price has been over the last 9 candlesticks is where this line will be. If I change this to 50, you'll see it move when I press OK. And now it's taking the average price of the past 50 of these candlesticks. And keep in mind, we're on the 5-minute time frame, so the past 50 5-minute candlesticks. Now I can do the same thing on the hourly time frame, and you guys will see the moving average here. You see it's in a different area. That's because it's taking the average price of where price was over the last 50 candlesticks, but instead it's 50 hourly candlesticks, which is a little bit over 2 days. So the moving average is something that a lot of people use, and a lot of people will use the moving average where if price sells or goes below the moving average, they'll just open up a sell, or if price goes above the moving average, they'll open up a buy. That's how some people like to trade it. It's a cool tool to have in your arsenal. You could even use it as you would only sell when price is below the moving average, or you would only take a buy setup when price is above the moving average. So the moving average is one of the most popular indicators that a lot of people use. So definitely give it a chance if it's something that you think will help with your trading, especially in the beginning, being able to tell which direction the market is going in overall. Moving averages are great for that. And feel free to play around with that number. You can put it to 10, 15, 20. You can put it to any number you want. Just keep in mind, it's just gonna move where the line is because it's only taking based off of that amount of candlesticks and the average price of that. Now, another indicator that I personally like, and I kind of told you guys about it, is if you come over here, press indicators, and type in kill zones. It's by this person named Oscar VS. I really like this indicator because it just shows you your trading sessions, where it actually started. We talked about trading sessions. We talked about what time those trading sessions were. And this just puts it onto your chart for you. So the yellow line by default is going to be the London session. Remember, I told you guys, London session starts at 3 a.m. Eastern Standard Time. I'm in Texas, so I'm on Central Standard Time, which is an hour behind Eastern Standard Time. So my yellow line starts at 2 a.m. Central Standard Time, which is 3 a.m. Eastern Standard Time. And my red line right here is when New York session starts, which is at 7 a.m. Central Standard Time, 8 a.m. Eastern Standard Time. And the reason I like seeing this on my chart is it just helps me understand and see exactly what happened during the last day or while I was sleeping. Because I know all of this happened from the yellow line up until this red line. This is all London session. Remember, there is a time when London session and New York session overlap, and that time goes up until 10 o'clock Central Standard Time right here, just like this. So I know exactly what's happened during London session here. And I like being able to see that on my charts because it helps me just keep track of the day as well, because I know this red line means the start of a new day, basically, new New York session trading day. This red line also means the start of a new trading day. So when I'm scrolling back and looking over previous trades, I'm able to see when the day changed over, basically, or when was the most recent session before. So I really like kill zones. It just helps me visually see the trading sessions. And for me, I like it personally. It doesn't really help too much with the trading, but it just helps me kind of see exactly and know what I'm looking at on the charts pretty fast. Now, another indicator that a lot of people like, and I personally like better than the moving average, is something that called the VWAP. So if you type in here VWAP, you're going to see volume weighted average price pop up. It's very, very similar to a moving average. I don't know why I didn't pop up my screen here. Oh. We'll go to a different chart really quickly. All right, so this is a different chart. Keep in mind, don't look at the candlesticks. Candlesticks look weird, but this is the VWAP, the green, the blue, and the green little area here. This is the VWAP, but realistically, the only part that's the VWAP is this blue part. It's basically, like I said, similar to the moving average. What you can do and what I suggest is to go into the settings over here, and under style, just turn off the upper band and the lower band and the bands fill, just so it shows the VWAP. Make sure just the VWAP is checked. And you can change the color of this if you want. You can make the line thicker if you want. You can do a bunch of different things if you want. It's just personal preference. But I like only seeing the VWAP line on it. But I trade it similar, and I use it similar to how a lot of people use the moving average. And that's with whenever price is below the VWAP, I'm looking for sales. Whenever price is above the VWAPs, how these candlesticks are actually above the VWAP, I'm looking for buys. So realistically, those are like the top 3 ones that I'd suggest for you guys to check out. There are obviously hundreds of different indicators, but definitely checking out kill zones so you guys get more familiar with trading sessions a lot faster. That'll help you out. And then check out moving averages and VWAP. See if it goes with kind of your thought process and helps you be able to determine which direction market is going in, so you know whether you should be looking for a buy opportunity or a sell opportunity. Now is probably the most important part. This is where we start talking about my top 3 strategies for all beginners. I'm going to break down each strategy. I'm going to break down why they work, when you should enter into each trade, when you should exit each trade. I'm going to go through everything you need to know about these 3 strategies so you guys can take this, start practicing it, so you can ultimately start making money today, realistically, from trading. Okay, so the first strategy we're gonna go over is called support and resistance. It's probably one of the most fundamental strategies that you guys need to know. And simply put, it's simply stating that when price gets to a certain area, the chances of it getting back to that area and doing the same thing that it did at that area is a lot higher. So what I mean by that, we know price doesn't just go straight up or down, or go up, down, up, down, up, down, up, down, up, down, up, down, that kind of thing, right? So what support and resistance is we're seeing, okay, cool. In this instance, price came roughly around this area right here. And every time it got in this area right here, it went up. As you see here, price went up. We see here, price went up. We see price came into here again and went up. That is called a support zone. Support is always on the bottom. Now, the same thing can happen on the top. We can look right here. On the top, we see price got into the same area, and every time I got in this area, it went down. Every time I got into this area, it went down. This is resistance. So support is always on the bottom. Resistance is always on the top. Just think of it as price is being supported up by a support because it's on the bottom, and price is resisting going above something because it's on the top. Now, the reason why this is so beneficial is because we see and we can be able to predict, okay, every time price comes in this area, it's probably going to go up. So we can end up buying when it gets down here to end up making money on this and capitalizing on the price going back up. Now, vice versa with its selling off resistance zones, we know price came in here and we can catch it to sell to the downside. Now, that's the basic of what support and resistance is. I'm going to show it to you guys live on the charts as well, but that's basically exactly what it is. There's a couple things I want to tell you guys though. When it comes to support and resistance, when it comes to any of the strategies that we talk about, when we're drawing our zones, keep in mind the reason we draw zones like this and not lines is because price doesn't always go exactly where price was at. It doesn't always go right here on this line. Sometimes it'll go a little bit past it. Sometimes it'll go more past it. Sometimes it'll stop right above it. So we draw zones. We draw zones around the areas. That's why we draw boxes. And I'll show you guys how big or how small to draw your boxes. But I want you guys to be aware of that. Never look for price to come to the same exact point, because that does not happen. That's not realistic. But also another key point to memorize with support and resistance is a lot of times, if we're taking this same analogy, we'll have a support and resistance zone. Imagine price is going up, down, up, down. If it breaks above that previous resistance zone, which is up here in this instance, a lot of times price will come back down and that previous resistance will actually turn into support zones like that. So if we draw it out, we had a resistance zone right here. Price couldn't break above it this time, or this time. Then when price finally broke above it, a lot of times price will come back down and treat that same resistance zone as a support zone. This is what we call a break and retest, because it broke our previous resistance zone and it came back down to retest it, and it treated that same previous resistance zone as now a support zone. Now vice versa, if we have a support zone down here and price actually comes and breaks to the downside outside of that zone, a lot of times price will come back up and end up treating this previous support zone as a resistance zone, and we can catch sells off of that. So obviously this is drawing. Let's go on the live charts and see exactly what this looks like in real time, right? So for instance, we see price came right here. Now keep in mind, we don't just randomly draw zones. We have to wait for when price gets to a specific area and we see a huge rejection off of it. As we see right here, price was going up, 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 up. Then it got right here and it ended up crashing down, selling off hard on it. That's what we want to see, because when we see that, then we can go ahead and take out our drawing and draw our box around it. Remember, we're using the rectangle icon. It's over here on the drop down next to under brush. We'll go to rectangle and we draw it. And how I like to draw it, most of the time, I like to make sure I cover the entire wick up until the body of the candlestick. That's personally how I like to draw it. Now, it's not always going to be exact. Like sometimes it'll be down here, sometimes right here. It's not always exact. It really just depends, because there's another example that I showed you guys where we see price came and wicked all the way down here. The wick came down here. And remember in our example about candlesticks, when we see a huge wick in a direction, that means price was really scared of this area. So that is also a support zone right down here. So I would draw a box right here, but I'm not going to draw my box along this entire thing, covering up the whole wick and whole body, because this box is absolutely enormous. So I won't put it super skinny, but I'll make it a decent size where it covers a little bit of it. And what that shows you, and as you can see, we came here. This is actual price action. Price came down here, then it went up, and you see it started going up, 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 up. Then it came back down, and we see price again wicked into here. What I mean by wicked is that just the wick came down here. We have a long wick to the downside. It touched into here and then went up. So we could have made money on this entry because we could have bought it off of here, because we saw that last time it came to this area, it ended up going up. So this time we know there's a good chance that price is going up. Now, same thing on this one. Remember, I told you guys we saw a huge volume to the upside, price action, candles going up. Then we see a huge crash down. So now we know we can draw a box around here and just wait for price to come here again. So if we just rewind this a little bit and we just wait and see, wait for a candlestick to come up into the area. So we see price touched it. We got a candlestick to touch it. We see wick tapped into it. Now we don't just enter for sales as soon as it taps into our zones. That's not what we want to do. Keep in mind, we're able to, this is on the 1 hour time frame, we're able to go down to lower time frames, and I'll show you why that's so important. But we don't just enter as soon as it touches here. We don't just sell it as soon as it touches here. We want confirmation that it's actually going to respect this zone. We want it to show us that it's actually going to be moving away from that zone or be scared of that zone again, for lack of better terms. And what we can do, we can either stay on the time frame that we're on, or we can go down one time frame, like from the hourly to the 15-minute time frame. And then we see, okay, cool. We have a nice big red candlestick. Remember, I told you guys, if we see a full candlestick that looks like this, where it's not a lot of wicks, it's just a lot of body, that's a good indication that price will end up going down again after that candlestick. So we could have entered a sell right here, right after this one, right after this candlestick closed. We could have entered a sell right here and made money on price going down. If we continue on it. We see price continue to go down and down and down, and we could have ended up making a lot of money here. Now, the reason why we go down on the time frame versus staying on the 1 hour time frame is because sometimes we're able to get in trades a little bit earlier. Remember, I told you guys when it comes to candlesticks, the lower the time frame we go, the more detailed we can see, the more we can see in detail actually. So on the hourly time frame, we could have still taken this trade and just waited for this big red candlestick, and we would have entered the trade right here. Now, keep in mind, when you guys see me hitting these long and these short positions, this is how we plan out our trades on TradingView. I know I went over it when we were going over TradingView, but a long position, which you'll find right under here on this one, you'll click the drop down, and long position or short position. Long means we're looking for buys to the upside. Let me actually template make this. Actually, I'll leave it. But when you first start up TradingView, it's not going to be these colors. I just chose these colors. It'll be green for the profit side and red for the loss side. And the middle line where color changes from white or from red to green is where you enter that. And the reason we use that is because we plan out our trades. So we click on it. It would enter us. It would be as if we're entering into a trade. This won't automatically enter us into trades. We'll get into that later on how to actually enter trades. But this will show us exactly where we'd enter into the trade so we can plan it. Remember, I told you guys the bottom one, which is going to be red, is your stop loss. A stop loss, basically what we use a stop loss for is, let's say we're wrong about the trade. We don't just want to hold it forever because we can end up losing a lot of money. We want to be able to manage our risk. And a stop loss basically is, okay, if I decide, like for this example right here, if I decide to enter a sell right here, I'm using a short position because short means I think price is going to go down. Like I said, long position means price is going to go up. If I'm using a short position, I'm thinking, okay, cool. I'm going to put my stop loss at a place where I don't think price is going to go above, or if it does go above that area, then I had just taken a trade that wasn't going to play out in my favor. So I always, and I'll get into this a little bit later on as far as entries and exits, I always put my stop loss above the candlestick or the highest point of which price was before I took the trade. So I took the trade right here. The highest point price was before I took the trade was right up here, as we see on this green wick. So I put my stop loss right above that, because if price goes above this, most likely I took a bad trade and it's not going to respect this area again. It's not going to be scared of this area again. Price will probably just end up coming up and going all the way up and breaking out of this area. But that's how we set our stop losses. Stop losses are extremely important. You do not want to not put a stop loss. A lot of new traders will come in here and they won't use stop losses, thinking that it just makes them a better trader. Guarantee you will never be profitable if you do not use a stop loss. You need to use a stop loss. And once you set your stop loss, don't move it. If you see price getting close to your stop loss, let the trade end. Close your trade out. Don't keep moving your stop loss. A lot of new traders will move their stop loss, causing them to lose way more money, because when we hop into trades, we set a certain risk amount. We're like, okay, our stop loss is right here. So we know automatically if our stop loss is here, depending on how big of a position we enter into, and we'll get into that a little bit later on inside this video, how to calculate that. But depending on how big a position we get into, we could be like, okay, I'm risking $100 on this trade. I'm okay losing $100. But if you keep moving your stop loss, now it's $150, $200, $300, $400, and you end up losing way more than you originally planned for. So we don't want to do that. We want to have our trade planned out beforehand with a solid stop loss. And then what I like to do as far as my take profit, that's basically where we want price to go, where we're assuming price is going to go for us to be able to make profits on it. I always like to target basically the most recent low point. So remember, we had the high point right here. The low point is right here. So if you guys remember our example about swing highs and swing lows and higher highs and higher lows. So we have a higher high, higher low, higher high, higher low, higher high, higher low. I'm going to target that most recent higher low or higher high, depending if I'm looking for buys or sells. So if we map this out, we had a high right here, then a low. Then we had a lower high right here, and we had a higher low right here. Then we had a higher high right here. So I would then target that most recent lower low right here. I'd move my take profit lever right there. So now we have our stop loss, we have our take profit, and then we'd see if price would come down here and we would end up winning the trade. And we did. Price came through and we ended up winning this trade nicely. But like I said, back to my example of why we go down to lower time frames, it helps us get better entries. Better entries means we have a better risk to reward. Risk to reward is an extremely important thing for you guys to understand. It basically means the amount of money that you're risking, this is how much money you'd make in multiplication of that. So when I say things like a 2-to-1 risk to reward ratio, that means if I'm risking 1, I'm making 2. That could be if I'm risking 1,000, I'm making 2,000. If I'm risking 10,000, I'm making 20,000. So I personally only take trades that have at least a 2-to-1 risk to reward ratio, just because of the fact that that just helps over time. Because if I lose a trade, or if I lose 2 trades in a row, I just have to win 1 trade and I'm then break even. I then won all my money back. And how you're able to see that, same thing on these long and short positions. If you hover over the long or short position and you look right here, risk/reward ratio, it'll show you it right here. So on this trade, this is a 2.19 risk to reward ratio. So that means if I'm risking $100, I'm risking it to make 2.19 that amount. So that's what risk to reward ratio is, and that's why it's so important. You'll see it on long positions and short positions. As you see, when it first starts off, it's at a 1-to-1 until I can drag my take profit level up, and you see the risk to reward ratio goes up because I'm going to make way more money because I'm holding it for much longer. I can move my stop loss in some, make my stop loss smaller, and that makes my risk to reward ratio smaller as well. I mean, higher as well, because I'm risking less to make more. Or if I enter my trade right here, if I can keep the same take profit level and stop loss level, but if I move where I entered at, if I got an earlier entry, you see my risk to reward ratio is going up because now my entry actually moved further away from my take profit level, which technically means I'm making more money because I'm getting closer to my stop loss level, which is the amount of money that I'm going to lose. But if that stop loss level is smaller than our take profit level, that amount, then we have a higher risk to reward ratio. So it's important that it's good, not necessarily important always, but it's good if we're able to get a earlier entry. So if we're looking for buys, instead of entering all the way up here, we could enter right down here and have a 3-to-1 risk to reward ratio versus entering up here and having a 1-to-1 risk to reward ratio. So how that looks in real time, I told you guys this was our trade originally. Remember, we entered right here. Stop loss right above that recent swing high, and we targeted that recent lower low, or higher low technically. And this was our entry right here. So with that, we have a 2.21 risk to reward ratio. But that's us entering on the 1-hour time frame because we're not able to see a lot of data. Plus, we have to wait for a whole hour to close or a whole hour to end before we can actually hop into a trade. What we can do is go down to the 15-minute time frame. When we go to the 15-minute time frame, remember I said, okay, we saw it come, it tapped into our zone here, our place where we were considering selling because we know it's scared of that area. And then we saw this big candlestick here that had a big body and no wicks, which just shows us that there's a lot of selling pressure. There's a lot of volume to go down. So instead of our entry being right here, which is where it originally was when we entered on the 1-hour time frame, we could have got an earlier entry and entered right on this candlestick right here. We kept the same stop loss. We kept the same take profit of that swing low and that swing high, but we entered earlier, which then turns our 2.21 risk to reward ratio trade into a 4.71 risk to reward ratio. So we'd actually end up making 4 times the amount of money that we risked versus only making 2 times. So that's a key. Obviously, we can go down as well to the 5-minute time frame. We could have technically entered right here. We could have went to the 1-minute time frame if we wanted as well and entered even earlier. But one thing to keep in mind, I know it sounds good to just keep going down on the time frames, but one thing to keep in mind, and what I always tell people, is the lower time frames lie more. And what I mean by that is that support or resistance zone that you draw, remember we're talking about support and resistance strategy, a support and resistance zone drawn on the 1-minute time frame is not as strong and respectable as a support and resistance zone drawn on a 5-minute time frame. Same thing, a 5-minute support and resistance zone isn't as strong or as scary, for lack of better terms, as one drawn on the hourly time frame, or an hourly one isn't as strong or scary as one drawn on the daily time frame. So you have to be careful when you're going to lower time frames. Yes, it can give you a better entry, which in turn gives you a better risk to reward ratio. But it could also be what we call a fake out, where it isn't actually rejecting at that area because it lies more. It's more sporadic. But that's basically what the support and resistance strategy is. What I like to do is I go on the hourly time frame and I'll draw my support or resistance zones. I'll try and find areas where price had huge rejections off of, where price was extremely scared of. I like that analogy, scared of. It makes it easier to kind of teach the people. But where price was scared of, once I draw those areas out, then I'll go down to the 15-minute time frame or the 5-minute time frame, and I'd wait for an entry candlestick. And an entry candlestick is basically a candlestick that I'd be okay entering on because I see it's respecting that area. It's still scared of that area. So for instance, on this one, you guys remember, this is the candlestick that kind of showed us that we're scared of it, that price was scared of this area after it tapped into our box here. I'd enter it, stop loss above that last high point if we're looking for buys, and I'm always going to target that last swing low area if we're looking for sells. Now, vice versa, let's say we're looking for buys as well, right? Let's say we have a support zone. This is a resistance zone. Let's say we have a support zone. Remember, we drew the support zone right down here. Price came here and we had a huge wick off it, which means price was scared of it. Price did not want to stay down there. So I drew my zone here. Now I wanted to wait for price to come back in here for me to buy. If I just entered on the 1 hour time frame, I would have technically entered right here, right? Because price, the body of price was right here. So I would have entered right here, and I'd have to put my stop loss below that swing low right here, that last low point, which is right down here, that wick. And then I could target my last swing high, which would be up here, right? But in reality, this is only a 0.82 to 1 risk to reward ratio. This is not a good risk to reward ratio. So what I could do to get a better entry, remember, we can go down to a lower time frame. If we go to the 15-minute time frame, we can see, okay, cool. Price came down here, and then we ended up seeing this candlestick. Remember, I showed you guys, and I told you guys, when there's small body, but wicks on the top and the bottom, long wicks on the top and the bottom, that tells us that there's uncertainty. And when there's uncertainty at an area of interest, a support or resistance zone, there's a high chance that price is going to then turn and go the opposite way. So I'd probably end up buying right here. I'd probably end up hopping into the trade right here because I see what this is called a doji candlestick. I see a doji candlestick. I'd enter right here. I'd put my stop loss right below the lowest of where price was, the lowest point of where price was, which is right here. And then I target that next swing high. So that next swing high could be right up here. I target it, and then let's see if this plays out. And it did. Price ended up hitting our take profit without hitting our stop loss here. This was a nice 4.3 to 1 risk to reward ratio, and it's simple as that. So like I said, first step is coming over here on the hourly time frame, looking for these support or resistance zones. You can spot them all over. The more time you put into this, like I told you guys in the beginning of the video, the more time you put in this, the faster you'll be able to understand it and be able to spot them. Like I can spot them extremely fast. Like I see this zone right here. Remember, I told you guys it's not always going to come to the same exact area. So don't look for price to come to the same exact area. That's why we draw zones or boxes. We see price came here and went up. Price came into it again right here and went up. Price come into it again right here and went up. We could have caught two trades here, buy right here and a buy right here. We have resistance zone right here. It came right here and sold down. It came up over here again and sold down. We could have made money on this one. And it came again. You see this huge wick that we had, this huge green wick. We could have sold off of here as well. So there's opportunities after opportunities when it comes to this strategy. It's a very, very easy strategy for beginners because, like I said, all you have to do is get used to finding these support and resistance zones. This is another resistance zone, multiple rejections here. We have another support zone right down here, multiple rejections here. This, like I told you, this strategy is extremely simple. All it takes is some practice. Okay, so the next strategy we're gonna go over is very similar to the support and resistance strategy, except instead of them being completely horizontal, they're actually slanted, and we call these trend lines. So we just went over support and resistance where it looks just like this. We draw our boxes, and price goes up, down, up, down, up, down in them and respects them just like that. Now, as you see right here, we have trend lines. This is price. Price is trending to an upside. Price is trending to the downside here, and it's respecting a pattern along a line. We don't draw boxes for trend lines. because we can't really make a box diagonal. We use these lines right here. We call them trend lines, and we just draw them and connect the points. It's kind of like connecting the dots, honestly. If you really just think of back when you were a kid and you like connected the dots, that's simply all trend lines are. It's always going to be on a horizontal path just like this. So when we see prices trending to the upside like this, we have a trend line here. Prices, every single time it touches this trend line and ends up going up. It gets close to the trend line, goes up. Touch the trend line, up. Touch the trend line, up. That kind of thing. That's all a trend line is. Same thing vice versa when price is going down. Touch the trend line, goes down. Touches the trend line, goes down. Touches the trend line, goes down. That's simply all it is. So a lot of times we can just use the same exact strategy or thought process as support and resistance, where as soon as price gets close to or around our trend line and touches our trend line, wait for that entry candlestick, that entry rejection candlestick, similar to how we waited on the support or resistance one. And I'll show you guys examples of it right now. That way we can catch sells off of these trend lines. Now, let's show you guys a real life example of this. So let me actually replay this back here so you guys can see it. So we see right here, price is going up, down, up, down, up, down, right? Up, down, up, down, up, down, up again, down. Every time it's came up here and touched this trend line, it's sold down, or gotten close to it, it's sold down. And that's what we want to see. Realistically, in order to see a trend line, we need to see at least 2 times it's respecting the trend line. This is not something how we do it on the support and resistance zone, where we just see one big rejection off of an area. We need to see at least 2 off of our trend line to make sure it's legit. So in this instance, for the most part, these 2 first touches right here, this just solidifies our trend line. So once I'd see this, I'd then be like, okay, let's draw that trend line. Let's connect the dots, right? So we connected all these dots right here. Now, all we have to do is wait for price to come back up to touch this trend line and give us a reversal candlestick. So this technically didn't touch it. It got close, but it didn't touch it, so we won't count that. But price came right here and ended up touching it right here. Touched it and gave us an entry candlestick. So we could have technically entered on this entry candlestick right here. Stop loss, same thing like I said before, above that swing, that last swing high, that most recent swing high, and targeting either a 2-to-1, 3-to-1, or sometimes even holding it all the way down to the last swing low. We could do that if we wanted. Now, that's a pretty good trade, a pretty decent entry right there. But same thing when it goes to support and resistance, we can just go down to the 15-minute time frame and get a much better entry. You see right here, we had our candlestick, touch it right here, and then look what we have, a doji candlestick. So you could have entered right here on this doji candlestick, putting our stop loss, same place above that swing high, targeting we could have went for just a 2-to-1 risk reward ratio. We could have targeted down here. We could have targeted right here, because this is a swing low right here. We could have targeted all the way down here, although I don't think price ended up going all the way down there. But either way, we could have made an insane amount of money just by using this trend line strategy. We just waited for at least 2 rejections for us to form and create and draw our trend line. Then we wait for price to come back up to that trend line, give us our entry candlestick, our reversal candlestick right here, and be able to capitalize on that and make money on that. That would have been a beautiful trade. Now, I believe I have another example here. Okay, so here we are with another example. This time price is going up. So we see price came down, then it went up, came down again right here, then it consolidated for a little bit, came down, up, down on the trend line once again, and went up. So same thing with this instance. We could have, the first 2, remember, that's when we're drawing it. So these first 2, we wouldn't trade these first 2. This is where we actually saw the trend line being formed. So now the third time, after we've actually formed our trend line, we'd wait for price to come back down into it, and we could hop in on this candlestick right here. Technically, we're on the hourly time frame. We could have hopped in on this one because we had that huge wick after it touched our trend line, which just shows us that price is scared of this trend line. Stop loss below there, targeted a recent high point, which would be right here. We could have done that, or we could just go down to a lower time frame, get a much better entry. You see we're able to come here and get our doji candlestick, right? We have our small body with wicks on the top and the bottom. We could have entered right here, targeted that same area, and got a 4-to-1 risk reward ratio. So if you risked $100 on this, you would have made $400. If you risked $1,000 on this, you would have made $4,000. If you risked $10,000 on this, you would have made $40,000. Simply like that, simply by waiting for the trend line to come down, create the trend line, and then wait for it to touch our trend line again, give us that entry candlestick, and hop into it. It's literally as simple as that. And I use the same parameters as far as entering into it. I always put my stop loss below that recent area before I hop into my trade. And then I'll always target a recent high. So a recent high could be right here or up here. But you could also just go for a 2-to-1 risk to reward ratio if you want, a 3-to-1 risk to reward ratio if you want. It's really up to you. And after, when you're back testing this and testing this strategy out, whatever you're more comfortable with, it's completely up to you. But I do encourage you to make sure that it's at least a 2-to-1 risk to reward ratio. You don't really want to take anything less than that, because if you lose a trade, it's going to take you multiple trades to make your money back. And you don't want to do that. You want to be able to even if you lose more trades than you win, you still want to be profitable, which is what will happen if you have a high risk to reward ratio, because you can realistically have a 30% win rate. But with a 30% win rate and you're always getting a 3-to-1 or 4-to-1 risk to reward ratio, no matter if you lose 6 out of 10 trades, those 4 trades will still make you way more money than you lost. So that's why it's important to have a good risk to reward ratio and don't just go for these 1-to-1 risk to reward ratios. But other than that, that is what I like to call trendline reversals. That's another amazing strategy for beginners. It's super, super simple, super, super easy to be able to comprehend. It just takes a little bit of time in the markets and just practicing on the charts, looking at charts to be able to see these patterns. Like I can see these trend lines very easily because obviously I've been doing this for a very, very long time. I can see this one easy. I can see we have another trend line right here. Just like that. I can see we have another trend line right here. I can see we have another trend line right here. Like it's the more time you spend on the charts, the faster you're going to be able to see this. We could have made money right here. Remember, we have our 2 bounces, which is how we draw a trend line. Then that 3rd bounce, we could have bought it, right? Same thing right here. 1 bounce, 2 bounce, we could have made money on it buying up here. 1 bounce, 2 bounce. We actually would have lost this trade right here, but this actually segues me into our next strategy, which is what I like to call a breakout strategy. It's probably one of my favorite strategies ever. It's great for new traders. It's great for people that like to be in and out of trades very fast. It's great for people that, like I said, are new, and it's not much different than our support and resistance or our trendline strategy. So let's hop into that strategy. So what is a breakout strategy and how can we make money on it? So if you keep in mind our support and resistance strategy, imagine this is our resistance right up here. We'll just use resistance for this example. Price comes, it's respecting our resistance. Nice, nice, nice. Maybe we made some money off selling off of this resistance, but then the time comes and price breaks above it. Price goes above our resistance zone. This is what we call a breakout. That means it's breaking out of either a support, a resistance zone, or a trend line. And the reason why it's so powerful is because when it breaks out of these support or resistance zones, it breaks out of it very, very strong, very, very fast. We can make a lot of money in a short amount of time with these things that we call breakouts. And how I like to enter them is as soon as price ends up coming and breaking out of these and we get a candlestick that closes outside of our resistance zone or our support zone, I enter into the trade. I'd put my stop loss wherever I feel comfortable, and I would target a recent high. So when we have our support or resistance zones, technically we can make money either way. We can make money if price sells off of it. We can keep catching sells off of it. Or with our resistance zone, if price doesn't respect it, if it's not scared of it anymore, and price ends up shooting past it, we can just make money buying outside of that zone. Now let me show you what that looks like on a real chart. Perfect example is actually right here. So let me replay this right now for you guys. So this is our resistance zone right up here to the top, right? We see price has just been respecting it. Maybe we caught a sell right here. Maybe we caught another sell right here. But then we see price is coming, right? Price is coming up here. It's coming close. And then we get a close outside of our resistance zone. That means when I say close, I mean the body of a candlestick closes outside of our resistance zone. We're not talking about the wick. We want the body of a candlestick to close outside of our resistance zone. And when that happens, I enter a trade. Most of the time, I'll put my stop loss right below that candlestick that closed outside of it. Most of the time, that's what I do. Sometimes I'll put it below the last lower high or higher low, depending if we're looking for buys or sells. This is our most recent higher low right here. Remember, we have, the price came down, up, down right here, came up, then it came down right here, right to this wick, and came up. So our most recent higher low is right here. So sometimes I put my stop loss below there, but most of the time I'll just put it below the candlestick that I entered on, which is the candlestick that closed outside of our box. And then what we can do the same exact thing. We can target more recent swing highs or swing lows. So if I'd have to, most of the time, you're gonna have to zoom out a little bit and look to the left. We see, okay, over here, price came up here, and then it sold down. So maybe next time price comes up here, it's gonna sell down again. So maybe when price gets up here with our breakout, we could just hop into this trade and we can see how this plays out. So we go, and it goes up, and we actually end up winning the trade. Now for this strategy, I don't really like to go down too low of a time frame. The lowest I'll go is on the 15-minute time frame most of the time. And as you see, would have got a similar entry on the 1 hour time frame. We entered up here, but the candlestick that closed outside of our box the first time would be this candlestick right here. So we technically could have moved our entry right down here, which made our risk to reward ratio basically a 3.1 risk to reward ratio versus it was originally around a 2-to-1 risk to reward ratio, which works out pretty nicely. But I don't really like going anything below like the 5-minute or the 1 minute, especially as a beginner. I would not suggest you going any much lower than the 5-minute for this breakout strategy, or really any of the strategies for the most part. Because remember, the lower the time frame, the more price lies. So that's literally all we're doing. We're waiting for price to close outside of our zones. We're entering in it. We're putting our stop loss below the candlestick we entered on. And we can either go for, like I said, a 2-to-1 risk to reward ratio, a 3-to-1 risk to reward ratio, or we could just zoom out and see where price rejected heavily off of previously. And that's exactly what we did right here. We see price, when it got here, it sold off heavily. So we might as well target this area right here, because if price comes up here again, it potentially could end up selling off again, which it didn't end up doing that. But we can't always know what price will do. It's just a safer bet to kind of get out at areas where price might end up turning it into a resistance zone. Remember, we were just in a resistance zone. Price could have turned this zone right here right into a resistance zone and ended up respecting this as a resistance zone. But as we see, in this instance, price did not end up doing that. Now, this works vice versa on sells as well. If we wanted to catch breakouts to the downside, right? In this instance, where we have a support zone right down here, it was respecting it, and then we see this candlestick right here, where the body, remember the body of the candlestick, we don't care about the wick. We want the body of the candlestick to close outside of our resistance zone. It closed outside of it. We could have entered a sell right here, stop loss right up here. And we could have targeted really anywhere, right? We could have targeted right down here. We could have targeted these lows right here. We could have just went for a 2-to-1. We could have went down to the 15-minute time frame. And we would have had the same entry on this candlestick right here. But realistically, sometimes we'll have a better, well, most times we'll have a better entry by going down to the 15-minute time frame. So we really could have done that. It works the same exact way with buys or sells. Now, keep in mind, this is for support or resistance. We can do the same exact thing on trend lines. If you guys remember my example from the previous strategy where we were talking about trend line reversals and things like that, we have our 2 rejections. We need to have our 2 rejections to draw a trend line. We see price came and then it broke outside this trend line and closed outside this trend line. We could have entered right here when it closed outside of our trend line, stop loss above that candlestick, and we could have targeted the last swing low. The last swing low is right here. This is that last lower low that we had. We could have targeted there. We could have just went for a 2-to-1 risk to reward ratio. We could have went for a 3-to-1. It's really up to you, but that's how I enter it. As soon as it closes outside of our trend lines, let's see if we get another example here. Perfect example right here, where price came, we respected it. We could have made money on these sells right down here, but then we see price came up out of it. We got to close outside of it. Stop loss below our entry candlestick, targeting a recent high up here. We could have targeted up here. We could have just went for a 2-to-1 risk to reward ratio. Like I said, it's completely up to you, but that's how I enter these breakouts. And as you see on all of these examples, I told you guys when price breaks out of a support or resistance zone, it breaks out of it strong. It's fast. It's going to you're going to end up being able to make a lot of money very fast because it's breaking out of these areas of constraint. Think of it as a rubber band. The more you pull a rubber band, when you let go of it, the harder it's going to break. The faster it's going to come back and snap you in your hands or whatever it is. Same thing when it comes to trading support or resistance. So the more times it's respecting a resistance zone without breaking through it, the stronger that breakout's going to end up being. Same thing when it comes to a trend line. The more times it's respecting this trend line, when it finally breaks out of it, it's going to break far, right? So that's why I love breakouts so much. That's why a lot of people love breakouts so much, because you're able to make a lot of money very fast. And that's how I enter them. All I do is wait for them to close outside of those areas. I put my stop loss below those areas or below my entry candlestick. And I'd either target a recent swing high or swing low or lower low or lower high, depending if I'm looking for buys or sells. Or I would just hold it for a 2-to-1 risk to reward ratio or a 3-to-1 risk to reward ratio, depending on however I feel comfortable with. So that is my top 3 strategies that I suggest for all of you guys to start practicing, start working on, start getting comfortable seeing these support, these resistance, these trend lines, these breakouts. Because if you could just master those, if you could just take one of those and master one of those, I promise you'll make a ridiculous amount of money. Simply all I do is breakouts and support or resistance. That's literally all I do. And that's how I'm able to make. You guys have seen me on social media. If you guys have not seen me on social media, I post live trades all the time where I'm easily making $8, $9, $10, $20, $30, $60,000 from simple trades within a couple of minutes. And all I'm doing are these support and resistance zones and these breakouts. I'm not doing anything crazy. When you see all these traders making money, they're not doing anything crazy. Their base is always built in support and resistance and breakouts. That's what it's all built in. So if you can master this, I promise you, you will absolutely kill it. Now, obviously, there's other strategies that could be implemented in it to make it a little bit better, make it more profitable, make it faster, make it have a higher win rate or have a higher risk to reward ratio. But the base and foundation is always going to be in support and resistance, trend lines, and breakouts. So you need to master these. So you guys understand candlesticks, you guys understand sessions, you guys understand a lot of these different things, strategies, all this stuff, support and resistance, trend lines, but how the heck do you test it? This is a very important part because you need to put in the work. I told you guys in the beginning of this video, the amount of time you put into this and the amount of discipline that you have over yourself determines how fast you'll be able to start making money inside of this career or this space. So the important thing that you need to do is backtest. As a new trader, you need to get used to seeing the charts. You need to get used to spotting support and resistance, spotting trend lines, spotting breakouts. So how do we do that effectively without cheating? So we hop over here onto TradingView. You guys saw me use this tool before. I told you guys about this bar replay feature on TradingView. Keep in mind, I believe you need the paid version of TradingView to actually use this. I'm not sure exactly how much it is, you guys can see, but I'm pretty sure they have like free trials and things like that. So use up that free trial. It's probably like a week. Be on here freaking 5, 6, 7 hours a day backtesting. So once you have the replay feature, whether you're on the free trial or you paid for it, this allows you to actually just go back in time for the most part and be able to hide the price action. Because a lot of times we'll be, let's say we don't have this on and we're just like practicing. We'll be like, okay, this is a support zone. Nice. I would have bought right here and made money going up. But everything's freaking clearer in hindsight. I think that's the terminology. I'm not sure. But everything's clear in hindsight. When we can see everything that was going to happen, it's a lot easier for us to be like, oh, we got this. But the cool thing about the replay feature is we can just replay to a random place. We don't even have to look where we're going. A lot of times I'll just close my eyes and scroll for the most part, and then just land myself at a random place and then just practice trading at that point. So we'll see, okay, cool. We have a resistance zone right here. Technically, we also have a trend line going on right here. Now let's see if price will come back down. We can use these buttons right down here. So if we click this, it'll just move forward one candlestick. If we press this play button, it'll actually just kind of play and start moving by itself. But okay, now we see price came down into our zone again right here. Let me actually go back in time so you guys can see exactly what I'd be thinking. So we see price came down into this support zone right down here. Now we know we just have to wait for an entry candlestick. We all know what an entry candlestick looks like because I went over it. So this next candlestick, a nice big body candlestick with small wicks, that's a nice entry candlestick. We could have entered right here, put our stop loss right below that candlestick because that's that last swing low after our entry. And we could have targeted this recent high right here. or we could have went for a 2-to-1 or whatever you'd want to do. And you just practice like that. Then you'd be able to fast forward and see, okay, this trade, it started to work out. It actually got to this last swing high right here. And then it ended up reversing. And then it tapped into the zone again. It didn't necessarily give us a nice entry candlestick though. But you see it ended up going up. So technically we could have taken not this candlestick entry, but we could have taken this candlestick entry right here. And you're just going to continue doing this day after day after day. You're going to keep going back in time, close your eyes, doing whatever it is, looking at the chart. Okay, what am I seeing as soon as I do this? I see a trend line right here. I see another trend line right here, right? I see a resistance zone right up here, right? And doing this over repetition, realistically, you can do like, I'd say like 50 trades an hour doing this, 50 trades, 60 trades, 70 trades an hour doing this. And it just helps you get your reps up. It helps you get much better at seeing resistance zones, seeing trend lines. You can see how price reacts at these specific things. So we see, okay, price came down here, touched this trend line, and ended up breaking through it to the downside. But we see we have this candlestick where it looks like price is scared to go down more. So it's probably going to end up going up more. Then we're able to see it went up. And now it looks like it's coming to this trend line again. We didn't get an entry candlestick for sales off this trend line. We got a long wick on the bottom as well, which means it's scared. Right now it's just having small candlesticks again, which I told you guys before. Small candlesticks means there's indecision. The next candlestick is small again. And the next one should be a pretty big candlestick. Oh, well, it's still small volume here. Yeah, so either way, you get to just practice it. You get to test and get good at finding these trend lines, finding these support and resistance zones, and drawing them out. That's simply all you do. And an important part of backtesting is you want to track it, right? So if let's say you're backtesting the support and resistance zone. Every single time you take a trade, right? Let's say you take a trade right here, then it's coming up here, and you buy off of here, right? You buy right here, you had your stop loss right here, take profit up here. If you won this trade, write down either on a notepad, a spreadsheet, there's trading journals and things like that. I have a couple that I recommend, and I'll tell you guys that a little bit later on inside this video when I get into the platforms and everything like that. But you can just write this down really on a piece of paper if you want to, or a spreadsheet. Just write down, okay, I won one trade. I won a support and resistance trade. I believe I won it because it had 2 rejections at my support zone, and I had my entry candlestick criteria, and then I targeted the recent high. Just write that you won the trade, what strategy you were using when you won the trade, and why you think you won or lost the trade. Vice versa if you lose it. I think I lost the trade because this, and this. I lost it because it didn't close outside my trend line, or it didn't give me a good entry candlestick criteria. Write the trade that you took, the strategy that you took, whether you won or lost it, and why you think you won or lost it, because you need to keep these in your mind, because after a while, when you trade 100 trades, you're going to look back and see patterns like, okay, every time I lose, it's because this, and this. So let me not do that, and that. That way I won't lose. Every time I win, it's because this, and this happens. So every time I see this, and this, I'm probably going to end up winning the trade. It just helps your confidence. So not just back testing, but also journaling your back testing is extremely important. So make sure you're putting in that work. You're putting in those hours of back testing. Like I said, just close your eyes, hit that replay button, go to a random point. And a cool thing, another thing that I like to put on as well, like I told you guys before, is putting all those kills on that kill zone indicator. Because realistically, you're not going to be trading at 3 o'clock in the morning. You're going to be trading New York session. Most people are going to be trading New York session. If you trade London session, then there's that. But if you're trading New York session, you should be trading only during that, after that red line comes on. So you shouldn't be trading during none of this other time right here, because that's not what you would trade in real life. You want to see how the market is in real life and how you would actually be trading it. So you'd go to the red line, wherever the red line is. Once the red line comes, then you'd sit there. Okay, I see a little resistance zone right here. I see a little trend line right here, honestly, but it's already kind of broken that trend line. You would mark it up just like that. You want to be trading it randomly. So that's a cool little thing to put on. That's why I like the kill zones, because you're able to see what time of day it is a lot faster, especially when you're back testing, which is extremely important. So back test, journal your back test, the reason why you won or lost each trade, why you believe you won or lost each trade, what strategy you were using, all that stuff. That's how you back test. Back testing, like I said, is extremely important. If you are complaining about not being profitable or not understanding the charts or not being able to see support and resistance, but you're not back testing, you're doing yourself a very huge disservice. And I already know why you're not succeeding in it, because you're not putting in the work to back test. I tell people, if you can realistically just take 30 minutes a day to back test, you'll be able to learn this skill a lot faster than someone who's not back testing. Obviously, if you can put in more time, put in an hour, 2 hours every single day, you'll get there a lot faster. But please, please, please just put in work back testing. I promise your future self will thank you. Now I want to share with you guys one of my most valuable secrets, something that not a lot of people know about that makes trading way easier. I'm not gonna lie. Ever since I found this out and figured this out, it's helped me to be a lot less stressed when trading, be able to see the charts a lot clearer, especially as beginners. I know the people that I've personally helped, it's drastically helped them out in the beginning of their journey, helped me make more money by being confident, holding my trades longer. It's just so many benefits to this, and it's a simple tweak on TradingView. So let's hop into it. So we went over candlesticks, right? Candlesticks, we went over what the bodies mean, the wicks mean. These are regular candlesticks. This is what most traders use. Most people like using regular candlesticks, and they're only taught regular candlesticks. But I personally like these other things called Heikin Ashi candlesticks. Now, if you come over here in the top and hit the drop down by the bar style and press Heikin Ashi, you'll see the candlesticks change. You see these candlesticks versus regular candlesticks, these candlesticks versus regular candlesticks. You can probably see the difference here. Regular candlesticks are very choppy. You see, it's the same price action that you're going to see on Heikin Ashi candlesticks, but it's going to look a lot smoother and cleaner. So if you look at this, we see there's green, red, green, red, green, red, green, red, bunch of different colors. It just looks super confusing and choppy. If we go to Heikin Ashi candlesticks, we see it's a bunch of green, pulls down a little bit for red, bunch of green, pulls down for red up here. It makes the charts way smoother, way easier to see, which makes it easier to find trend lines, to find support zones, to find resistance zones. Oh, that was a horrible drawing. To find resistance zones, to find trend lines. Like I see, it just makes it way easier to spot all these things with Heikin Ashi candlesticks. Versus on regular candlesticks, it can look a lot more cluttered, a lot more choppy, which as a new trader can be extremely confusing. Now, there's a couple differences when it comes to Heikin Ashi candlesticks, and I'm going to point them out for you because it can actually be really great when it comes to specific strategies. There are certain strategies that I actually use that I only use Heikin Ashi candlesticks on. So let me break down exactly what these candlesticks mean in each and every one of these candlesticks because they're different. The wicks mean the same thing as regular candlestick wicks. It just means where price has been throughout the entire candle. We're on the 15-minute time frame, so this is where price has been throughout the entirety of 15 minutes. Same thing if I go to the 5-minute or the 1 hour. It works the same as that as far as the wicks. Now the body is completely different, and where price starts is completely different. So the body of the candlestick always starts in the middle of the candlestick before it. It doesn't start where price actually is. I don't want you guys to look at the bodies on regular candlesticks and think that's where price closed at. Price did not close here. Price did not close here or here. The body of where the candlestick is the average of where price was throughout the entire candlestick. So, for example, on this candlestick right here, it always starts in the middle of the previous candlestick. So this candlestick, you see the body started in the middle of the candlestick before it. The body started in the middle of the candlestick before it. The body of this one started in the middle of the candlestick before it. There's that. So that's not where price opened at, right? This is just where the Heikin Ashi candlestick started. But the body of where it closed at, right here, when price ended, let's say this is the 8:30 candlestick right here. This is the 8:45 candlestick. When the 8:30 candlestick ended, the average of where price was throughout this entire 15-minute period is right here. So price could have been all the way down here. Price could have been up here, down here, up here, down here. But the average of where price was throughout the entire time was right here. This is not where price closed at. I have to keep saying it so you guys understand it. This is not where price closed at on Heikin Ashi candlesticks. This is the average of where price was throughout this entire candlestick. Same thing in this example. The average of where price was throughout this entire candlestick was right here on the body of this candlestick right here. Price could have been up here. Price could have been down here. Price could have even closed right here. The price could have closed right here, but still the average of where price was throughout this entire 15-minute candlestick was up here. And that's exactly what each candlestick means. Same thing with the bullish candlesticks. So the body to the upside is where the average of price was on bullish candlesticks. On bearish candlesticks, which means price going down, the average of where price was is on the bottom of the candlestick right here. So that's where the average of price was. This candlestick, this is the 830 candlestick. If we go to regular candles right here and look at that same candlestick, we see this same candlestick actually ended up closing down here, but the average of where price was up here throughout the entire candlestick. So that kind of tells me that price was chilling around here most of the time. Then at the end of the candlestick, price just shot all the way down here and it ended up closing down here. So it's very great for being on Heikin Ashi candlesticks and being able to see the market a lot clearer. You're able to see resistance, support zones, trend lines a lot easier because there's not as much noise. There's not as much up or down colors or red and green colors as it would be on regular candlesticks. But you have to be aware of the difference between Heikin Ashi candlesticks and regular candlesticks by understanding that the body of the candlestick does not tell you where price opened at or where price closed at. It's the average of where price was throughout this entire candlestick. And like I said, that's extremely powerful. And the reason that's extremely powerful, especially for any type of breakout strategy, is there are things called fakeouts, which I told you guys about before, where let's say we have our resistance zone right here, right? Price comes here and then it breaks out, right? It breaks out, and remember, we enter when it closes. Let's say it closed right here. In our minds, we're like, okay, let's enter into that trade. But we didn't know majority of the time it was right down here. Then at the last 2 seconds before the candlestick closed, at the end of that candlestick, it just shot up here. So now it looks like it closed outside of here. And then price will end up just coming right back down because it barely lasted above here. It didn't show us that it would stay up there. But with Heikin Ashi candlestick, if we wait for the body of the candlestick to close outside of our resistance or our support zone, that means the average of where price was outside of our resistance zone, which just amplifies our win percentage when it comes to taking a breakout. We won't get faked out, not nearly as much, because instead of us hopping in because it just wicked above here and was just above here for a couple seconds before it closed, we know the average of where price was above this resistance zone, so we can feel confident taking a breakout to the upside. It's extremely great for breakouts. I suggest you guys check it out and practice back testing with Heikin Ashi candlesticks as well and getting used to them. I do suggest though that you guys master candlesticks first of all. Get used to regular candlesticks before trying to switch over to Heikin Ashi. But once you're comfortable with regular candlesticks and completely understand them, then maybe try adding some Heikin Ashi and looking at the Heikin Ashi candlesticks just to be able to see it and be able to understand it. What you can do as well in the beginning, what I have a lot of people doing, is they'll mark up their charts on Heikin Ashi candlesticks. Then when they're looking for their entries or they're actually trading, they'll just go back to regular candlesticks. And that's simply because Heikin Ashi candlesticks make it way easier to be able to see the charts, to be able to understand the charts and see trend lines, support and resistance zones, things like that. So I'd suggest you guys check out Heikin Ashi candlesticks. Get used to them. There's a little workaround because on TradingView, it doesn't actually let you do the bar replay, the backtesting feature that we talked about with Heikin Ashi candlesticks. You can only do it on regular candlesticks, but there's a workaround on how to get around that. And simply all you do is come over here on regular candlesticks, and there's an indicator called, type in Heikin Ashi candle overlay. It's by this person named B. Jorgum. Press it, and you'll see it'll go over your candlesticks right here. But you see regular candlesticks and Heikin Ashi candlesticks. That's why it looks kind of crazy right now with all the colors. If you right click on your chart and go to settings, you can turn off the appearance of the regular candlesticks by unchecking the body, the borders, and the wick, pressing OK. And then once you do that, all you see is that indicator. You see the Heikin Ashi candlestick overlay on top of regular candlesticks, but we don't see the regular candlesticks anymore. But to TradingView, we're still on regular candlestick, so we can backtest. We can use that replay function. Without doing that whole thing, if we go on Heikin Ashi candlesticks, and try and press replay, we get this error that says bar replay isn't available for this chart type. So that's a little workaround for you guys if you guys want to backtest using Heikin Ashi. But I definitely suggest you guys master regular candlesticks first and then try double dabbling in Heikin Ashi, because like I said, Heikin Ashi candlesticks have literally changed my trading game. So we're about to dive into this website, and I'm also going to give you a couple more tips for you guys to kind of be aware of when it comes to fundamental analysis. So let's hop into this website. So the website that I like to come on to see all the news, remember, fundamental analysis is mainly just about news events and things that directly affect each stock, like earnings and things like that. I come over here on forexfactory.com. It basically plans out and shows you every single news event that's going on for the day. It tells you what time it's happening, tells you what currency it'll affect the most. It tells you how impactful it will be, yellow being the least impactful, red being the most impactful, and orange being the medium impactfulness. So I come on here every single morning. I see exactly what news is coming on for the day. And realistically, I don't pay attention to anything except for USD, right? The currency has to be USD because USD is really what affects most of the pairs that we go over. Now, if you're trading like Euro USD or GBP JPY, pay attention to the Euros, pay attention to whatever JPYs, if there are any. But for the most part, USD will affect every single market there is. Every pair, if you're trading forex, futures, crypto, stocks, options, anything, USD will affect it. And realistically, the only ones that's going to affect it impactfully is going to be the ones that are red, the high impact expected news. So anytime I see that, I really just don't like to trade around that time. I'll give it like a 15-minute buffer. I won't trade 15 minutes before the news comes out or 15 minutes after it, because price can end up doing a lot of craziness. I could be in a trade and it'll just instantly take me out or something like that. It's just not worth playing with, and we don't want to gamble with our money. So I come to this website, make sure there's no news around the time when I'm trying to trade, or if I'm hopping into a trade, I don't want to be in news given that 15-minute buffer. Also, what you can do, and what I'll do, is I'll go over here on Google and I'll just type in what stock earnings are happening this week. I'll type it in. You can come to actually the NASDAQ website and it'll tell you all the stock earnings that are happening. Because if you're trading like NAS 100 or NQ or ES, S&P 500 or YM, which is US 30, these are all basically just huge. They're just a bunch of stocks put together. So let's say Tesla is having their earnings. Realistically, if Tesla earnings comes out, it could heavily affect the price action of NQ, ES, and YM. So you want to be aware of the news events or the earnings events that are coming out about high profile kind of stocks. High profile stocks are like Apple, Nvidia, Amazon, Google, Tesla, things like that. But I just like to come on here just to make sure no huge earnings is coming out at that time or on that day. Now let's go over what platforms you are going to need to use. We went over TradingView, which is a staple platform or website that you're going to need to be extremely familiar with. But now let's go over the other platforms where we actually enter these trades in, where we put money into it, where we're actually able to buy and sell and actually enter into trades. So let's go over those right now, whether you want to trade Forex or futures. Okay, so personally, I like trading futures on this platform called TradingView. Keep in mind, when it comes to trading, you're going to need something called the platform and the broker, right? So a lot of these platforms, especially when it comes to futures, will be the platform and the broker in itself. When it comes to Forex, you'll need a separate platform and a separate broker, but I'll get into that a little bit later on. I personally like TradingView. This is the one that I use all the time when I'm day trading. This platform is extremely simple to use. It's not too complicated. There are other things that people can use like NinjaTrader, TD Ameritrade. There are a bunch of different other platforms that you could check out. Iron Beam as well. If you're not inside the US, check out Interactive Brokers. That's a good one if you want to get into futures trading, but you're not in the US. But personally, I love TradingView. It's super, super simple to use and easy to use. I'll get into showing you guys exactly how to use this platform, but I just want to make you guys available I just want to make you guys informed about this platform. This is what I personally like using. It's literally just called TradingView. Now, this is if I'm trading futures. If I'm trading Forex and want to trade Forex, I use a platform called TradeLocker.com. It's very, very similar to TradingView, but it allows you to actually trade through it. So the charts are going to look very similar. We'll dive into TradingView in the back end of it so you guys can actually see it. But it allows you to actually trade through it. You'll press your buys and your sells. You'll be able to actually enter into positions. But since this is a forex platform, you're going to need a broker that you connect to it. And I'll leave the broker that I personally suggest in the description down below. You'll use that one because a lot of these ones can be scammy. A lot of them can actually run off with your money or have horrible spreads. Basically what spread means is if you press buy and price is right here, if the spread is too high, you can press buy when price is here and it'll get you in all the way up here. So just mess up your trade entirely. That's why it's important to have the correct and a good broker that you can connect to this platform. I've been using literally the same forex broker since I started off trading, and that was what, over 7 years ago now. So I'll leave a link for them inside the description down below so you guys can use them and check them out and use it for Trade Locker because they work absolutely amazing with Trade Locker. Super good spreads, but this is the platform you're gonna need to get familiar with. Now let's hop into how to actually use these platforms. Okay, so starting off on TradingView, once you sign up and create an account, keep in mind you have to go in there, actually get approved for account. All you have to do is really put in your information and they'll approve you within, most of the time, 24 hours. Once you do that, you'll be able to log in with your credentials and it'll take you to a screen that looks similar to this. You'll probably only have live trading and simulation here. You probably won't have market replay, but basically all this is if you want to actually start live trading, come over here, you'll just press click trading. And you'll see simulation here, which is basically, think of it as a demo account, a fake account. And this is where I suggest every new trader to be on in the beginning of their trading. I suggest people to be on a simulation account or a demo account for at least 1 month before you go on the live markets. And that's because you want to get used to trading. You want to get comfortable with trading, understanding how to use the platform, understanding risk to reward ratio, support or resistance, just getting used to trading overall. And you don't want to be getting used to trading using real money. You want to be using the simulation. Now, there's also something right here called market replay, which you can use to backtest, but I showed you guys how to do the backtesting on TradingView. I personally like the backtesting on TradingView a lot more than on TradingView, so you don't have to worry about market replay as of right now. So if we click in simulation here, you'll see your chart will pop up. Over here in the top left corner, you'll have whatever pair you want to look at or currency you want to look at. If you press the new tab button, you can add, let's say I want to trade gold. So I type in GC. Now I'll leave information down in the description down below so you understand what these monthly codes are, where you see U, V, X, Z, G. Basically, all future contracts expire after around 3 or 4 months, or sometimes every month. And each month has a different monthly code. But I'll leave that inside the description down below as well, a link so you can see which one is for each month. But most of the time, when you type in the ticker that you want to trade, in this example, GC, the first one that pops up is the one that we're going to be trading. And then on TradingView, it'll tell you, okay, when this contract is expiring, it'll tell you, okay, it's time to switch contracts. And then it'll switch you to the NGV one, then the NGX, then the NGZ. But you'll just be able to click on here, press select, and it'll add it to your charts here. You see I have a couple charts up here. The red ones are just because the contract has expired. You'll see there's like nothing here for the most part. But if you come to the one we just added on, which is GC, you're able to see a bunch of things over here. Now, keep in mind, this charting, I don't really use the charting on here too much. I more so mark up my charts on TradingView, then just come over here to actually just press buy or sell, right? So, but there is a way for you to mark up your charts here. The same thing as we see on TradingView, the time period, we can change our time frame, 1 minute, 5 minute, 15 minute, 1 hour, 1 day. Excuse me, that kind of stuff. We can also change what type of candlesticks we're on. Right now I have it on Heikin Ashi candlesticks. You can go to regular candlesticks. You can go, the chart looks super, super messed up right here for some reason. But you can go on Heikin Ashi candlesticks. You can go on really anything that you want, any type of chart that you want. You can do line charts. Then you can come over here and just go on your chart settings and change a bunch of things in your chart settings. Go to your chart element settings. This basically is like if you add an indicator on here, because you can add indicators on here as well. As you see, I have the view up on there. That's that white line right there. You can add other indicators. There's a bunch that you can add. You're just coming here and just find whichever one you want to use. You can create a template. Template basically just means if you want your candles to look a specific color. Keep in mind when you first open up TradingView, it's going to be green and red, just like it would be on TradingView. That's just the default colors. I've changed mine to red and white. That's just personal preference. Now, if you come over here to look to the left, we can actually see a data box, which basically just shows you basically what's going on where your cursor is at, the highs, the lows, things like that. I don't really pay too much attention to that for the most part. You also have your drawing tools here. You can have your same line that you were having on TradingView. You can put your rectangles as well, draw it on there just like you did it on TradingView. But keep in mind, I don't really mark up my charts on here for the most part. It just is an option if you want it. Now, if you look over here, you see we have actual options to go into trades. So you have your buy market, sell market, buy bid, sell ask. I don't pay attention to buy bid or sell ask. I only use buy market and sell market and limit orders and things like that. And I'll explain what those are. So buy at market basically means we're buying wherever price is at right now. So we see prices right here. Let's go to regular candlesticks. We see price right here is right here on YM. If I wanted to hop into a sell right here, I can just press sell market. And this number right here basically just tells you how much contracts you want to buy. And like I said in the description, I'll leave links for, you can see how much each contract is worth and how much each tick is worth for each contract, so you can calculate your risk accordingly. But right here, let's say I wanted to open up one contract and I wanted to sell one contract. This says one, I press sell market. As you see now, I'm in a trade. You can see my account here, my equity, which is basically how much money I have inside my account. And then you see my open P&L, which is the profit and loss. This is the amount that I'm up or down currently. So right now I'm up. I'm negative $15. When you see the number in parentheses, that means you're negative that much. When you don't see it in parentheses, that means we're positive that much. So technically I'm up $15 right now, down $5. So you're able to see it just like that. And when you want to close out your position, all you do is press exit at market and close. So you see I did that. Now you see our open P&L is not there anymore. We see our equity has went up because we made $10 on that trade minus the fees that it took out. And that's basically exactly how you trade it. It's not much complicated things kind of going on this chart for the most part, or on this platform. It's really just buying and selling. Now, there are things called ATM, right? So you remember how I talked to you guys about when we're drawing out our stop losses and planning out our trade with our stop loss and our take profits. On here is where you would actually place those stop losses and take profits. So for instance, let's say we have a line right here. Let's say that's our take profit level. And let's say this is our stop loss level, right? This ATM basically just, they're called bracket orders, but bracket orders, simply put, is just stop losses, right? So what you would do is hit this gear icon to the left of it, turn it on, and basically what you can do is just come on here, keep this in ticks, type TP and stop loss, and your take profit, you can change this to, depending on if you always go for a certain amount of ticks, as in that's the amount that price is moving up or down. I can say, okay, after 20 ticks, I'll close it, or after 20 ticks, I'll close it. I'll have a 20 tick profit, 20 tick take profit, sorry, and a 20 tick stop loss, right? And I can actually save this as any type of order I want to save it as, or I can just put it in as of right now. So we'll press save right here. And now you see ATM doesn't say off anymore. Now it has these little dots or whatever. So now when you see I enter into a trade, so let's go and sell market. Now you see these other green lines. So since I'm going for a sell, the one that's on top would be my stop loss. That means whenever price touches this green line, it will automatically take me out of trade. And it will stop me from losing too much money. Same thing with the green one on the bottom. Since we're going for sales, the green one on the bottom is our take profit, which is what we're targeting. We can actually, once we put it on our chart, we can drag it up or down wherever we want to drag it. So if we wanted to adjust it to match our lines, you see price touched my green line and took me out. So it took me out of the trade, which is good. It protected me from losing too much money. But if I want to show you guys this example more, I can drag my stop loss and take profit. So technically, you don't need to put the number when you're setting up your bracket order or your take profit number. You don't need to put the actual number. You can just get it on your chart. Once you get it on your chart, then you can line up the numbers with your drawing that you have on TradingView. So you remember we have our long position drawing and our short position drawing. If we know our stop loss on that drawing is at 42.725, we can just drag our line there. And we know our take profit on that long or short position is at 42.660. We can just drag our line there. We don't have to necessarily put it in when we're setting it up. We just want to get it on the screen at that point. So that's basically exactly how you use it. Now, there are other things that you can do. So I talked to you guys about buying market and selling market. Let's exit at market and close. So there are these things called sell limits and buy limits and buy stops and sell stops. Basically what that means is, okay, let's say when price comes up here, I want to just get into the trade. I want to just get into the trade if price touches right here, right? I can actually just click on my screen here and press sell one limit. And what that'll do, as soon as price touches this red line right here, it'll enter me into a sell, which that means I don't have to sit here and look at my charts. I know I want to enter a sell as soon as price gets to this area because I've done the technical analysis and I know price is probably going to reverse at this area. That allows you to be able to enter trades without actually sitting there to press sell market or buy market, whichever way you want to go. And as you see, since I have my bracket orders turned on, it automatically will put in my stop loss and take profits as well. And we can drag that. So that way, when our trade gets triggered in, we'll have our take profits and stop loss triggered in at the same exact time, which is absolutely amazing. So like I said, you can go in market orders, or you can go in these sell limits or these buy limits by just right clicking on your screen and pressing buy one limit or sell one limit, whatever you're trying to do at that moment. I'll close out all of those trades though. But that's basically exactly how you use Tradevate. You don't really need anything else for this platform. Like I said, all you're doing is entering in and out of trades. But that's if you're trading futures. Now let's go in TradeLocker to show you guys how you would actually trade forex on that platform. Okay, so here we are on TradeLocker. You can actually just go to the website. They do have an app, but website works just fine if you just go to live.tradelocker.com, or when you sign up for the broker that I recommended for you guys. Like I said, I'll leave a link for it inside the description down below so you can get signed up with it to connect it to TradeLocker, because you need to do that. They'll give you a link to just press, and they'll give you your login instructions. They'll give you your login email as well as the password to log in to connect it into TradeLocker. But once you connect your broker to TradeLocker, this is the screen that you're going to see. Same, like I said, it looks exactly like TradingView. We have the same tools here. We can hit the drop down and we can star whichever ones we want to star if we want to add it to our favorites list. It's the exact same thing as TradingView, but the only difference is that you can actually trade on the side over here. So down here, you'll see we have our balance. We'll have the current profit and loss if we're in anything, equity, which is basically the same as balance, margin used, margin available, and margin level. You don't have to worry too much about that as of right now. I'm just kind of getting you guys into being able to trade it. And the bottom left corner right here, if you click that, that'll show your accounts. I don't want to open up my accounts because then it'll show my account numbers and it'll show you all the money I have in it. And I don't want y'all to try and do something funny, you know what I'm saying? But you'll click that, it'll show you your accounts. But over here is where you can find what you want to trade. So let's say I want to trade GBP JPY, right? So I type in GBP JPY, it'll give you a couple options. I like most of the time just going for the .pro ones. So if you click that, the chart will change, and now it's on that chart, the GBP.pro. Now this right here is how you enter into trades. So when it comes to futures, the size of your position is determined by contract size. When it comes to forex, the size of your position is determined by lot size. That's why you see right here lots. You're able to put in, okay, I want to buy 1 lot of this. You want to buy 0.5 lots of this. You want to buy 10 lots of this, or whatever, right? Now I'll leave a lot size calculator inside the description of this video as well, so that you can learn how to calculate it, because it's going to be different for every single pair that you kind of bring up. But the cool thing about TradeLocker and the broker that I have that connects to TradeLocker is if you hit this little up button right here, it'll actually do the calculations for you. So let's say you put in your long or short position. Let's say you wanted to sell right here, right? And you put your stop loss up here or wherever you want to put it. And let's say you want to put your take profit down here. You can see, okay, your stop loss is what at 19759 or whatever, right? Put our stop loss in. We can just drag our stop loss right there. We can we can click on take profit and drag our take profit where we want to have our take profit at. And then if we click on this risk, we check this risk thing right here. We don't even have to calculate the lot size. We'll check in risk and we'll just input how much money we want to risk on the trade. So if you go under stop loss and next to P&L, let's say you want to risk $100 on the trade, it'll tell you exactly how many lots you need to actually open up to risk that amount with your given stop loss that you have, which makes trading so much simpler. You don't have to go to the lot size calculator and any of that. You'll just put in your stop losses and your take profit numbers, and then you'll make sure you click that risk, and then you'll be able to hop into the trade once you change however much money you want to risk. So let's say I want to risk $500. You see it changed it to 4.02 lots. Let's say I want to risk $300. It changed it to 2.41 lots, which is super, super, super convenient because you don't have to do the math yourself, which is super, super dope. And that's why I love TradeLocker tagged along with the broker that I personally like using. So that's really all the platform is. It's nothing crazy as far as the charting is the same as TradingView. The only difference is you have this trading side of it, and you can actually play around with this. You can do market orders. Remember, market orders is entering exactly where price is at. We can put pending orders, which is the same as what we were talking about with those limit orders. Once you press on pending, you see this pops up. We can actually just drag this. Let's say when price gets right here, we want to hop into a sell. So we'll make sure we're on sell. We can hit the same thing of putting stop loss and take profit. I don't know where I put my stop loss here. Here it goes. Let's just put 20 right here. So yeah, so we can drag this wherever we want to drag it. So that way when price touches right here, it'll automatically get us in the trade. It'll automatically put our stop loss right here. It'll automatically put our take profit right here. We can click on this risk amount, and let's say we want to risk $20. We can do that. So we'll end up risking $20 on this trade. It'll tell us how many lots we need to do that. And then we can press sell stop. And I don't think I have any money inside this account right here. Yeah, I don't have any money. I think 53 cents inside of this account right here that I'm showing you guys. So it's not going to actually let me open up a trade, but that's exactly how you would do it. You'd be able to set your pending order, which is the same as a limit order for the most part. And then you would get into the trade and be able to trade. You'd be able to see your P&L right down here as it's going. You'd be able to see all your trades over here. And it's simple as that. That's how you actually enter in and out of trades on TradeView and on Trade Locker. All right, you guys. So if you are going to trade futures, you do need to be aware of one thing though. You will need to purchase what we call market data subscription. That basically allows you to be able to see the charts in real time. If you don't do that, when you open up a NQ chart, whether on TradingView or on TradeView, it will say delayed over here and you'll actually be 15 minutes behind. So my chart is up to date. As you see, I have a timer ticking down and my chart is up to date. It's 12:20 as of right now when I'm recording this. But if I didn't have the market data subscription, I would only be seeing the candlestick at 205, right? Which is not good. We obviously cannot trade like that. We need to see the up-to-date price action. So I'm going to show you guys how to get the market data subscription. Keep in mind, you have to do this on both TradingView and on TradeView. So I'm going to show you how to do it for both of them. It's very, very simple. So on TradingView, you'll come up here to the top left corner. You'll hover over your name, go to account and billing. Once you do that, you're going to want to come over here to settings, under settings, and scroll down and go to real-time market data. Then you're going to want to press get real-time data. And the one that I suggest for everybody to get is this one right here, CME Group E-Mini included. It has the CME, CBOT. It has basically everything you need. It's $7 a month, which isn't bad at all. So you'll click on that and subscribe to that, and you'll have it on TradingView. Now you need to get it on TradeView. So how do you do that? You come over here to TradeView. In the top right corner, press application settings. Then you come over here to subscriptions. You'll do the same exact thing. You'll come in here, press under market data. You'll just go to update subscription or say like subscribe or whatever. And you'll just get the same thing. Just get the CME bundle. Keep in mind, you don't need the level 2 or anything. You could just get level 1, which is about $12 a month. So you can just get in there and subscribe to that. So that way you have it on TradeView and on TradingView. Now that you guys understand trading, you understand technical analysis, fundamental analysis, you understand how to read charts, how to enter trades, the platforms that you guys need. Now it's time for arguably the most important part. If you haven't heard this before, I'll be the first to tell you. Day trading is literally 80% psychology and maybe 20% actually technical analysis. And the reason being is because really you can learn how to day trade. I just taught you guys how to read charts, how to look at strategies very fast. You can learn this within a week, realistically. The hard part, and which is what stops a lot of people from consistently making money inside of this market, is the fact that they don't have discipline. They don't have the right mindset that allows them to not just make profits, but keep profits and keep profits over a long period of time. And that's what I call being consistently profitable. We don't just want to be profitable one day, 1 week, 1 month. We want this to be something that we can stick with for years and consistently make money, just how I have been able to do it. And reality, it's because we have to have a certain mindset. And that mindset is made up of a couple things. Obviously, we need to have a set trading plan, and we'll get into that next, that just gives us a set of rules that stop us from doing things that cause us to lose money miss out on money, or just ultimately make stupid mistakes when it comes to trading. You cannot come into this trading as if it's a hobby or some fun thing or like some gambling addiction. This has to be treated like a job, being the fact that you clock in, you come and look at the markets at the same exact time, you do the same things over and over again, you make your money, you get out of there. You don't spend your entire day looking at charts, because what you're going to end up doing is finding bad setups, finding random things just to hop in, random trades just to hop in just because you're bored. And that is what causes a lot of people to lose a huge amount of money. Other things that you need to keep in mind, and a lot of problems that I see a lot of new traders have, is the fact that they like to overtrade. Realistically, overtrading kills a lot of people's trading careers. Think of it this way. A lot of people believe that the more trades you take, the more money you make, which in reality, that is the furthest thing from the truth. The more trades you take, the less quality trades you end up taking, which means that you end up losing more trades and giving money to the markets. We don't want to do that. We want to make money in the markets going based off of us taking A+ setups or great setups, great strategies, and then keeping our money and not giving it back. So we want to not take a crazy amount of trades. We also want to have proper risk management. I kind of told you guys about this before, about always having at least a 2-to-1 risk reward ratio. Now, yes, you can be profitable with a 1-to-1 risk reward ratio or less, but it can be a lot harder as a new trader. So that's why I think it's safe to start, and that's how I started, with a 2-to-1 risk to reward ratio. So having proper risk management where we're not moving our stop loss, when we have a set stop loss right here, knowing that if price gets here, we're just going to close the trade out at a loss. Knowing that we're risking, let's say $100 if price, I just hit my mic, but $100 if price gets right here, we are okay with that. But if price starts getting close to our stop loss, and you end up moving your stop loss down, causing yourself to end up losing more money and more money and more money. And as you see, it keeps going down. Now, instead of losing $100, you ended up losing $600. And now you're like, trading sucks. There's no way that this works. And it's all because you didn't have proper risk management. You moved your stop loss. Never move your stop loss. When you're setting up your trade, that's how your trade should be. That's how your stop loss should be. That's how your take profit should be, especially in the beginning. Another thing that you have to be extremely careful about is not switching from strategy to strategy to strategy. You'll have a great week trading a strategy, then maybe you'll lose 2 days in a row and you're like, oh, my strategy sucks. Let me find a new strategy. Please don't do that. That was one of the biggest mistakes that I made as a new trader, and I see a lot of new traders making. They're switching from strategy to strategy to strategy just because they had a bad week or just because they had a bad month. You have to realize, like we talked about before, market works in cycles, and there's different types of markets. We have our trending, consolidating, ranging, things like that, breaking out markets. Sometimes 1 month isn't going to be as profitable as the month before. That's just what happens. You need to learn to optimize your strategy in different market conditions. So please do not jump from strategy to strategy to strategy. Find 1 or 2 strategies and stick to those. Make sure you stick to those, please. I'm telling you guys, if you guys can do this, this will save you so much time, save you so much money. Just don't try and jump from strategy to strategy to strategy. And then ultimately, the main part that you need is discipline, because if you set all these rules, and we're about to get into creating a trading plan, but if you don't have the discipline to follow this trading plan, the trading plan is just a piece of paper. You need to have discipline when it comes to trading. It's something that's going to come over time, but if you can just master listening to yourself, I promise the journey of becoming a profitable trader will not be long at all. With that being said, let's get into how to create your trading plan. There are a couple of things that you guys need to have written down so that you guys can answer these and have your trading plan formed. I'm just going to give you guys the things to write down, and you guys will answer it on your own time. So the first thing you're going to need to write down is what pairs you're allowed to trade. Have a maximum amount of things that you're allowed to trade. Don't say you'll trade everything and have a million things on your watch list. I suggest, especially as a new trader, to only look at 3 pairs, whether you want to trade NAS 100, NQ, and GBP, JPY, whatever it is, just stick to 3 pairs. And the reason why that's so important is because as a new trader and as a trader overall, you have to understand all these pairs and all these instruments all have different personalities. And it's extremely hard to figure out the personality of each pair or instrument if you're looking at a million of them. And the reason being is because, okay, if you just focus on NQ, you know, okay, at 8:30 in the morning, NQ has a lot of volume and it usually does this, this, and this. At 4:30, that's when it starts slowing down. At 10 o'clock, it usually reverses, that kind of stuff. You learn all that by focusing on just a handful of pairs. So list out right now, max 3 pairs that you're going to focus on. You're going to backtest your strategies on. You're going to actually trade live. Do not try and have a huge watch list. Like I said, stick to max 3. I'd suggest 2 or 1 even, but 3 is great for beginners. Next, you're going to want to give yourself a window, a time window when you're allowed to take trades. And the reason why that's so important is because a lot of people, especially new traders, will just get bored at freaking 8 o'clock at night and just randomly start opening up trades just because they're bored. And that's extremely detrimental to your success as a trader. Like I told you guys, you need to treat this like a job. So give yourself a time window from when you're allowed to take trades. For example, you could say, okay, I'm allowed to take trades between 7 a.m. and 12 p.m. Whatever that time window is for you, you have to stick to that. Now, it doesn't mean that you sit and look at your charts from 7 a.m. to 12 p.m. or 11 p.m., whatever it is, or 11 a.m., sorry. But that just means if your strategy and setup and your entry happens during that time frame, you can trade it. If it happens outside of that time frame, you cannot trade it. So make that time frame and stick to it. Next, I kind of hinted at this, but you need to have a set strategy. I suggest having 2 strategies max that you focus on. You don't want to have a million different strategies. You don't want to be all over the place trading trend line bounces, trend line breaks, support or resistance bounces, supply and demand, scalping. You don't want to be doing a million things at once because you'll never get to fully learn and optimize that strategy. So stick to 2 strategies. Find whichever 2 resonate with you and just practice those, and only trade those strategies. No matter if you see another strategy happening or another setup happening, just stick to those 2 that you have chosen. You're also going to want to limit how many trades you're allowed to take per day. The reason why that's so important is because a lot of times people will just randomly be taking 100 trades a day, and that's ludicrous. That's absolutely crazy. Limit the amount of trades that you're able to take. As a scalper, you're going to end up taking more trades per day than someone that's an intraday trader. An intraday trader is going to end up taking more trades a day than a swing trader, but for the most part, you want to limit it. And I like to say, keep your trades, especially as a scalper, under 5 trades per day. As an intraday trader, if you want to be an intraday trader, I say 2 or 3 trades max. And as a swing trader, 1 trade per day max, or 3 or 4 trades per week max. And that's just going to kind of help you stay in a position where you're consistently looking for the best setups, because you know, okay, as an intraday trader, I can only take 2 trades. Do I want to use up one of my trades on this setup? Is this setup good enough for me to use one of my trades for the day on? And it just helps you be more selective to take better trades. You're also going to want to limit in the beginning how much money you're risking per trade. You don't want to have $1,000 in your account and you're risking $500 per trade. That's not realistic. You're going to end up blowing your entire account. So have a max amount of money that you're allowed to risk per trade and don't go over that number. A good percentage that most people say as new traders is to stay under 3% for the most part. Max being 5%, but I say stay under 3% of your entire account balance. You're also going to want to write down your entry criteria. What do you need to see to be able to enter into a trade? And the reason why that's important is, like I explained before, you don't want to just get bored. Let's say all your other things are happening, but you just get bored and you're just like, okay, let me just press buy. Let me just press sell randomly, but you have no entry criteria. We talked about earlier inside this session about having an entry criteria, looking at the candlestick that has a full body or whatever it is for you, a doji candlestick. Just figure out one small thing that has to happen for you to be able to hop into a trade. Don't make it super specific because the markets can look different, but just have something that's like, okay, it has to be above the VWAP, or it has to be below the VWAP, or it has to be whatever. Just have one small thing that just stops you from being able to randomly open up a trade. Now, once you have all that, like I told you guys, if you guys don't have the discipline to actually stick to it, it's not going to mean anything. With having this trading plan, I like to tell people to also form a consequence for it, because losing money in trading is not a big enough consequence for basically everybody in trading. They'll continue to make the same mistakes and make the same things that they know is causing them to continuously lose money, because they just keep losing money. That's all they feel. I tell people to add a real life consequence to it. And what I suggest for people is, if you break any of your trading rules, if you say you're risking $100 per trade and it goes to $100.50, you broke your trading rule. If you traded outside your window, if you traded a different strategy, a different pair than you're supposed to, you broke your trading plan, and you have to have a consequence for it. I tell people a good consequence is an ice bath or a cold shower. Nobody likes doing that. So as soon as you break any of your rules, instantly ice bath, instantly cold shower. But obviously you know you better than I know you. So think of something that you would not want to do more than 2 times. I have people who have to take a ginger shot when they break their trading rules. I have people that have to run 5 miles. People that have had to give their little sister $100. Just like whatever you would not want to have to do more than 2 times, make that your consequence. And every single time you break your trading plan or break your trading rules, instantly do that consequence. That's what's going to actually help you stay consistent in following your trading plan, which is going to help you consistently become profitable. So another huge part of becoming a consistently profitable trader, and what I've actually given credit for my success in trading, is journaling your trades. We kind of talked about this earlier on in this session, as well as when we went over backtesting. I told you guys that journaling your backtesting is extremely important. But when you're actually live trading and trading in real time, you also need to journal it. It's extremely important because it helps you to be able to look back on all your trading data and be able to make decisions moving forward, because you can see, okay, every time I lose a trade, it's because this, and this. Every time I win a trade, it's because this, and this. So let me avoid this, and this that's causing me to lose trades, and let me double down on this, and this that's causing me to actually win trades. And it helps you be extremely profitable because you're able to learn from your previous mistakes. Us as traders, us as people, we can't remember what we did 2 weeks ago. Nonetheless, being able to remember 10 trades that we did last month. But that's important data. Trading is all about data and patterns. I told you guys this in the beginning of this video. It's all about patterns. So when we see these patterns and when we're trading in live and real environments, we notice and we're able to pick up on other data that helps us to make better decisions moving forward. So you need to be journaling your trades. I say this, if you're not journaling your trades, it was going to be extremely hard for you to be a profitable trader because you're not learning from your previous mistakes. You're not looking at what happened last month, what happened over the past 5 months. I'm trading this strategy, but over the past 5 months, I could have made way more money if I made this small tweak. And the only reason you'd know to make that small tweak is because you've been journaling these trades. I had a strategy where I was consistently making a good $3,000–$4,000 on this strategy, but I noticed that I could have held this strategy a lot longer, where I could consistently end up making $8,000, $9,000, $10,000, $11,000, $12,000 instead of the $3,000, $4,000, $5,000 I was making before. And the only reason I knew I could do that is because I looked over my data that I had on my trading journal. So that's why I'm telling you guys it's extremely important to journal your trades. And I'm going to show you the platform that I personally suggest. The journal that I suggest is just so smooth, so simple, so easy. Let's hop into it. So I mentioned to you guys in the beginning of this video that you don't need as much money as you guys think. And that's because you can use these things called prop firms. So I'm going to show you guys exactly what prop firms are, how they work, and I'm going to show you guys which ones I recommend for you guys to use, because there are a lot of scammy ones out there that aren't going to pay you out, that are going to just be super scammy, and I want y'all to avoid those. So I'm going to show you guys the ones that I personally use and the ones that I personally suggest. So let's hop into this. First of all, what the heck is a prop firm? Basically, in simple terms, a prop firm allows you to pay a small fee, let's say $200, and with that small fee, you're able to take a challenge. And what that challenge is they'll give you, let's say, a $50,000 account. You'll trade on that $50,000 account, and if you're able to get to a certain profit target, let's say it's $53,000, then they'll actually give you that capital to trade with. Now, you're not able to withdraw $50,000 once you pass the challenge. Once you pass the challenge, you have that $50,000 account, and all the profits you make on it, you're able to keep 80% or 90% depending on the prop firm. So let's say you get a $50,000 account, you pass it, and you make $10,000 on it. They will pay you $8,000 or $9,000 depending on what the profit split is, and you're able to keep that money. And all you had to pay was that $200 initiation fee to take the challenge, and then you have to pass the challenge and then make those profits. So it's really great for new traders or people who just don't have a lot of capital, but they want to be able to make a lot of money. Like I said, you can invest $200 and have the chance to have $50,000 to trade with, instead of you having to go and scrap together $50,000 to trade with of your own. So they're extremely beneficial. They're great for traders. I always tell people they're not for completely new traders. If you're still learning, as I told you guys, stay on a demo account for at least 1 month. Once you do that and you start getting comfortable, I suggest for people to go to a small live account. A small live account is like $100 or $200 and practice with that for about another month, just to get you used to the emotions of trading with real money. Then once you do that and you feel more confident, then you can buy a funded account. And this is when you actually start making a bunch of money. You can start actually making thousands, tens, $20,000, $30,000 every single month. after getting in these prop firms without having to put a lot of money up front. So let's hop into some prop firms that I personally suggest for you guys to check out and start using as soon as you start feeling comfortable in the trading space. So here is one for Forex. Keep in mind, there's funded prop firms for Forex trading and futures trading. Right now, we're gonna start on Forex. Funded Pro right here, a great platform. I've used them for like 2 years now. Whenever I want to trade on a funded account and I don't want to use my own live funds, I've used them. I've never had a problem with them paying me out. They're super, super cool. You get daily payouts whenever you want. Keep in mind, I'm not going to go into depth about all the different rules that they have. When you go on these websites, you can just simply go through their rules. A lot of times their rules will be something like you start at $50,000. You can't go under 50, or you can't go under like $45,000. If you do that, you lose the account and you have to buy it again. But to pass it, you have to get to $53,000. Whatever that number is, it'll basically tell you all the rules when you go on all these websites. So this is a great funded account personally for Forex if you're going to trade Forex. And the cool thing is that it connects actually to that platform that we went over, Trade Locker, using the broker that I suggested for you guys with the link in the description down below. Now, you can also get this platform and they have their pricing and stuff like that all over their website. You can just go through it, play around with it. But I do suggest you guys use the link that I leave in the description down below because it'll save you 10% or 15%, depending on which actual account you end up getting. So I can end up saving you $100, $150, whatever it is on the actual account when you purchase it. Like I said, I've been using them for a long time. Never had problems with them. Super, super down to earth. I actually met all of their the people on their team. You see, I did an interview with them right here. That's me, this handsome guy right here. So yeah, super, super dope website and prop firm for the most part. So I suggest you check them out if you want to get into Forex trading and you want to use a prop firm for it. But like I said, I'll leave a link in the description down below to get this Forex prop firm and be able to save 10 or 15% on buying the actual funded accounts. Now, if you want to get into trading futures and you want a futures prop firm, Top Step right here is probably the most popular one that most people use. They're cool. I like them, but I'll show you guys the one that I like a little bit more than them. But a lot of people love Top Step. They're super, super cool, super, super straightforward. They've been around the longest. They're like the biggest one. You can see all their plans here. You can get a $150,000 account for $150 a month. Keep in mind, it says every month, but once you pass the challenge, you don't pay the monthly fee anymore. So technically most people pass it within 1 month. So technically you can get a $150,000 account for $150, which is super, super cool. They're always having sales. Like you see, they're always having sales all the time. You can get a $50,000 account, $100,000 account. It's completely up to you. They'll have their rules and everything like that on the website. So I checked them out. I don't have a 10% off thing for y'all, unfortunately, but Top Step is super, super cool and they are cheap already. So you could check them out if you want to get into futures trading. You cannot trade Forex on a futures prop firm, just like you can't trade futures on a Forex prop firm. So this is a cool futures prop firm. If you want to check out Top Step, it's topstep.com. Now, the one that I personally like a little bit more is called Take Profit Trader. It's basically the same as Top Step. The only difference is you can get your payouts a lot faster than Top Step, which is personally, I like getting paid, obviously, as most people. So I just like them a little bit more. They're a little bit more expensive, but same thing, $150,000 account is going to be $360. There's no sale on it. Top Steps is usually $375, but they always have a sale. But Take Profit doesn't really have sales that much. But you can check them out and compare whichever one you guys want to actually give a chance. Like I said, if you want to trade Forex, Funded Pro is where you want to go. If you want to trade futures, Top Step or Take Profit Trader is what I personally like. How I tell people to use these prop firms is to use them, get payouts from them, and take a percentage of those payouts to fund your live account, because you ultimately want to get to the point where you're able to trade your live account and trade your own money without having to give 10 or 20% away to a prop firm because you're using their capital. So take a percentage of the profits that you make from these prop firms to use it to fund your live account. Take the other percentage and go buy a freaking Lamborghini, whatever the heck you want to do. But make sure you're taking some of the money. I personally like the fact that you can take some of their money and just put it into a live account to trade it for yourself. Now, if you've made it this far in the video, I know you will be successful in trading because you've already put an extreme amount of time into learning this skill. So I want to give you the opportunity to get my advanced tested strategies, the same strategies that I use every single day to make multiple 5 figures in a matter of a couple minutes. It's absolutely crazy. Now, these strategies have been completely tested over 500 trades. They are the same exact trades that I trade live every single day. And they're the same strategies that have helped thousands of people make insane amounts of money every single day, every single week, and every single month. You'll also get to be able to see the difference between a good version of the strategy and setup versus a bad version of it. Because a lot of times these strategies can look very similar, but there will be small little changes that show me that this one might not win versus this one will win. It kind of goes back to when we were talking about backtesting and journaling our trades. I've traded these trades over 500 times. I've traded these strategies over 500 times. So I've been able to look back on the data and optimize it to perfection. And I want to give you guys the opportunity to be able to see those exact strategies as well as all the data and all the good setups versus the bad setups. If you want that and be able to accelerate your trading to be able to make thousands of dollars every single day within a couple of minutes, click the link inside the description down below to get it. Now, if you've made it this far in the video, I know you will be successful in trading because you've already put an extreme amount of time into learning this skill. So I want to give you the opportunity to get my advanced tested strategies, the same strategies that I use every single day to make multiple 5 figures in a matter of a couple minutes. It's absolutely crazy. Now, these strategies have been completely tested over 500 trades. They are the same exact trades that I trade live every single day. And they're the same strategies that have helped thousands of people make insane amounts of money every single day, every single week, and every single month. You'll also get to be able to see the difference between a good version of the strategy and setup versus a bad version of it. Because a lot of times these strategies can look very similar, but there will be small little changes that show me that this one might not win versus this one will win. It kind of goes back to when we were talking about backtesting and journaling our trades. I've traded these trades over 500 times. I've traded these strategies over 500 times. So I've been able to look back on the data and optimize it to perfection. And I want to give you guys the opportunity to be able to see those exact strategies as well as all the data and all the good setups versus the bad setups. If you want that and be able to accelerate your trading to be able to make thousands of dollars every single day within a couple of minutes, click the link inside the description down below to get it. It will literally teach you how to trade these strategies the exact same way that I trade them every single day and how I'm able to achieve this financial freedom, this location freedom, and this time freedom because I'm able to make an insane amount of money every single day with only spending a couple minutes inside the market. It's how I'm able to spend less than 30 minutes in the market every single day, yet still be able to live my dream life. With that being said, I truly look forward to all the amazing testimonials and messages I'll get from people just like you that will tell me that this video changed their life. This video allowed them to learn a skill that not just sets them free, but their entire family to have that financial, that location, and that time freedom to ultimately live their dream lives. And I'm so happy that you guys entrusted your time with me to be able to teach you this insanely valuable skill. If you got value out of this video, I would suggest you subscribe because I'm consistently dropping value for people just like you that want to be able to become financially free with day trading. I'm excited for you to start this journey, and I look forward to you driving past me in that Lamborghini after getting your dream life. I'll see you guys in the next video.